Good evening, ladies and gentlemen. I would request from each one of you to please kindly be seated as we are about to begin this amazing day in just a while. Well, once again, I extend a very warm welcome and a very good morning to each one of you. It's a very humble request from all the guests who are welcome, who are present right here, to please kindly be seated as we're about to begin this amazing day in just a while. Thank you so very much. Well, ladies and gentlemen, once again, I extend a very warm welcome to each one of you. In just a while, we'll be beginning this amazing day all together. So, looking forward to have a wonderful day ahead. Thank you so very much for being here amongst us. Good morning, ladies and gentlemen. This is your host, Elena. It is my absolute honor to welcome you all to the IFSCA CPSE Summit 2.0 Opportunities in Gift IFSC. Today, we gather at this prestigious platform to explore and unlock new opportunities within India's first international financial services center, Gift IFSC. To commence this momentous event, we begin with the traditional lamp lighting ceremony, symbolizing knowledge, prosperity, and enlightenment. I would like to invite the following distinguished dignitaries to join us on stage for the lamp lighting ceremony. Please join me in welcoming Shri Rajashri Gupta, MD and CEO, ONGC Videsh Limited. Along with, I would also like to invite Shri K. Rajaraman, Chairperson, International Financial Services Centers Authority. Also, I would like to invite Shri Pankaj Jain, Secretary, Ministry of Petroleum and Natural Gas. Also, I would like to invite Shri Dr. Dipesh Shah, Executive Director, IFSCA. Can we have huge round of applause for all the dignitaries, please? Thank you, esteemed dignitaries, for gracing the stage with your presence. As we officially begin, I now invite Shri Rajashri Gupta, MD and CEO, ONGC Videsh Limited, to deliver the welcome address.
A very good morning and a warm welcome to all the dignitaries here. Respected Petroleum Secretary Sir, Sri Pankaj Jain Sahab, respected Chairperson IFSC, Rajaraman Sahab, Executive Director Sri Dipesh Shah ji, senior colleagues from the PSC and senior officers of IFSCA. It gives us immense pleasure to welcome you all today to the inaugural session of IFSCA CPSE Summit 2.0, which will highlight the opportunities in Gift City IFSC. We are thankful to IFSCA for giving ONGC the opportunity to host the summit today. This is a very opportune moment to have this summit when India is progressing rapidly towards the goal of Viksit Bharat by 2047. India continues to be the bright spot in the world economy, and Gift City IFSC is the engine to propel India's financial services to the global arena. As multiple third parties have estimated and projected that 25% of the future energy growth up to 2050 will be from India. India's consumption of the energy basket today is 16%, which is expected to grow to 14% in the world energy basket. So Gift City offers these opportunities to both Indian and foreign multinationals to carry out their business in an efficient manner. The light touch regulations in Gift City IFSC provide both the robust regulatory environment and the ease of doing business at the same time. I remember just a year back, time flies by, in January of 2024, we inaugurated our subsidiary in Gift City. Secretary Sir was there, Chairman IFSC Sir was there, And it was a very momentous occasion for our firm because we have 100% of our business outside India, and Gift City provided that ideal opportunity to leverage that to get the maximum benefits that we used to look for in other countries. I would like to share that within this 1 year, we have strengthened our Gift City presence. We have started raising money in Gift City. We are also looking for further transfer of our shareholding and PI in different countries and different shareholdings, the assets that we have from other countries to Gift City, because this provides the ideal opportunities. We are working with Gift City continuously, and we see that this is one place where things get done very quickly. The commitment and the intent is exemplary. When I participated in the CPSE summit of IFSCA in Gift City last year, we had mentioned that this Gift City is not just an opportunity, but a strategic imperative. Our experience over the last 1 year has only strengthened our belief. We are hopeful that in the coming years, we'll be expanding further our activities, and it will become our global center of excellence and treasury. I am also confident that with your august presence, today's deliberations will enhance understanding of the opportunities available in Gift City and give valuable inputs to further improve upon this. A number of very interesting sessions are lined up, and we look forward to hearing the speakers. I wish the marquee event resounding success, and once again, a very warm welcome to NGC premises for this meet. Thank you.
Moving forward, I am honored to invite our esteemed speakers for their inaugural addresses. To share his invaluable insights and set the tone for today's summit, may I request Shri K. Rajaraman, Chairperson IFSCA, to kindly come on stage and address the gathering.
First of all, very warm welcome to all of you, and good morning to all of you. Sri Pankaj Jain, Secretary, Ministry of Petroleum and Natural Gas. Sri Rajyasree Gupta, Managing Director OVL, my colleague Dr. Dipesh Shah, and distinguished senior management of several PSUs and members of the banking community and other stakeholders who have been invited for today's workshop. This is the second edition of the CPSE Summit that we are organizing. The first one was held last year in Gift City. So we thought that we should come here because we have the opportunity, we will provide the opportunity for some of the CEOs of some of the PSUs also to drop in and then provide their valuable insight for seeing how we could provide a better platform for CPSEs with a global focus in the International Financial Services Center. Many of you, all of you, I think definitely would know about Gift City, but there is going to be a detailed presentation on the same. But nevertheless, let me tell you that IFSCA is the fifth regulator, in India, fifth financial sector regulator, after RBI, SEBI, IRDA and PFRDA, and combines the functions of all the financial sector regulators for this offshore platform, which has been set up in Gift City, Gandhinagar. So this, being a unified regulator, I think affords us a lot of advantages by ensuring that our regulations span multiple verticals with the least of difficulties, I think. So therefore, it is possible that more products can be manufactured out of Gift City than probably in the domestic area, given that the single regulator would be capable of providing the necessary approvals. The thought process behind Gift City, while the Parliament enacted this 2019 legislation, was initially to onshore what is offshore. A number of Indian companies had set up their operations globally, including many CPSEs. Because the environment and it was not right in India maybe several decades ago in terms of taxation or in terms of the ease of doing business or in terms of capability to raise cost-efficient finance and so on and so forth. So therefore, the idea was that how do we get these companies to come back and onshore themselves in this new platform? So that initially inspired us to set up the IFSCA, the International Financial Services Center. But as over the last 5 years, I think the advantage that the new act afforded us was that I think we were under no compulsion to copy and paste the domestic regulations, in this special economic zone. So the 31 plus regulations and frameworks that we have today are an exercise in global benchmarking, be it the banking regulations or the capital market regulations. We looked at what other foreign jurisdictions do while drafting our regulations. So therefore, our regulations are more principle-based, less prescriptive, and more aligned with global regulations. So therefore, when an Indian business which is offshored wants to shift, I think they would find themselves with the least of difficulties in moving into IFSC. And that is what has happened over the last 5 years since the enactment of the IFSC Act. Today we are home to nearly about 28 banks, 29 banks, and more than 200 alternative investment funds. We have two stock exchanges, which largely trade on stock index futures. We have an active bond market, which is also hosted by these two exchanges. And we also have a bullion exchange, because India is a very large buyer of bullion. And we also have an insurance vertical where a number of insurance companies provide life, general insurance for both corporates as well as for the non-resident Indians. So therefore, in addition to that, I think being focused on the thought of onshoring what is offshore, that also got us to put out regulations on aircraft leasing and ship leasing. Today we are home to at least about 36 aircraft lessors, which include some of the large airline companies, including Air India, Indigo, etc. And we also have a number of ship leasing companies, at least about 16 of them. And all of them have managed to, and the development that has happened over the last 1 year gives us confidence that all this will definitely grow to scale. We have been constantly working with the various ministries to ensure that there is a level playing field when a company actually sets up in IFSC compared to a foreign jurisdiction. So this has been work in progress. I think by and large, I think about 85% of the work has been done. But still there is about 15% of the work to be done in terms of ensuring greater clarity in policies and so on and so forth. So if you look at the current focus, is to look at how IFSCA will be able to support the Vikasit Bharat at 2047 agenda of the Government of India. Honorable Prime Minister of India had vocalized this in 2022. So since then, I think a number of stakeholders, both within the government and outside the government, have been working on to make this happen. I think so. We are some of the important works that are being done include improving the legal and regulatory architecture. So colonial era laws are being replaced with modern, business-friendly, forward-looking laws. So similarly, I think regulators like us are constantly looking at how to improve our regulations to ensure that there's greater policy certainty, regulatory certainty, there's least ambiguity for businesses and so on and so forth. So this is work in progress, and constantly it's a moving target, because as global regulators continuously upgrade their regulations, we are also in the process of constantly reviewing. In fact, the IFSCA is one of the few regulators which have a regulation on how to make a regulation, I think. So therefore, the consultative process is mandatory, I think, and putting out drafts of our regulations before they are notified, before they are approved and notified, is something which we have been constantly, which you have been consistently doing. So we are trying to improve that regulation as well, to build in greater certainty. In the near future, we are going to upgrade that regulation also to ensure that there is clarity that there will not be any retrospective amendments. And the idea being to raise regulatory certainty to the highest levels possible, enabling businesses to invest with the least possible risks that are involved in their investment process. Now, if you look at the overall business profile in the IFSC, while we mentioned banks and other core financial sector verticals, one very important participant in this whole development process is obviously the Indian business community, the corporates in India at large. So if you look at the IFSC, it's made for two kinds of people. I think one is, of course, the corporate world in India and abroad. And also, it's also focused on NRIs and persons of Indian origins as individuals. I think so that is not a matter of interest for today's conference. So if you look at the corporate world, I think so the idea was that how do we provide a platform which enables Indian corporates to raise cost-efficient finance at the doorstep without having to go to foreign jurisdictions. For decades, I think Indian corporates used to go to Singapore or Luxembourg or London to either issue bonds or to raise a line of credit and so on and so forth. So today, all of that can be done in IFSC with the least possible effort. And the GIFT City banks, the market there, the banking market there is getting deeper by the day. And I'm told that the markets here are as efficient as anywhere else, and people are able to get fine rates, which normally they would get in a global jurisdiction. So as the ecosystem becomes deeper and wider, we expect that the Indian corporates will increasingly resort to IFSC as a source of finance. So if you look at the total banking ecosystem there, the total asset size has crossed about $78 billion. And out of which, trade finance and project finance through the ECB route are all very important components. Indian corporates raise money in GIFT City not only for their Indian operations, but also, many of them have subsidiaries abroad. So they use that opportunity to raise finances for their global operations as well. We are also seeing, in fact, the purpose of today's conference, I think as was last year's, is to actually to look at enabling the central public sector undertakings, state public sector undertakings, which have got a large, which work on international markets, which have connect to the global markets, and even maybe large cooperatives, which might have need for dollar capital to also to look at IFSC as a source. So I must say with the satisfaction that a number of corporations, the central public sector undertakings have actually set up their operations here. I think I would mention, the ONGC Videsh was one of the first, I think, to take the plunge. IOC is another, I think. So many of them have actually commenced operations and from the day one, I think. So they have constantly been able to use the GIFT City platform effectively for raising finances. We also have a number of other companies like the Shipping Corporation of India, which has set up SCA Bharat in GIFT City with the hope of leasing ships for a variety of operations out of GIFT City. So we have a number of other companies like PFC, Power Finance Corporation, the Renewable Energy Development Agency, IRIDA, and REC, and many others who have launched their platforms and in the process of setting up their business there. So while an Indian corporate need not be physically present in GIFT City to start making use of the GIFT City platform. If you are sitting in Mumbai, I think you can use the GIFT City platform to raise resources. By reaching out to a bank in GIFT City or to list your bonds out of the GIFT City exchanges. So, but there are many companies like ONGC Videsh, which manage their assets across the world, which have a need to actually consolidate their operations in a cost-efficient manner. And that is certainly an opportunity that GIFT City would provide. Not only that, I think we also have a number of other, as I already mentioned, the aircraft leasing, ship leasing frameworks provide an opportunity. So suppose some of the companies would want to lease a ship or own a ship out of GIFT City. I'm happy to note that some of the GIFT City banking units have extended finance for such aviation financing and ship financing, etc. So therefore, many of the corporates, not only the central public sector undertakings, but also the private corporates have managed to use the platform effectively for raising finance for such kind of asset purchases. Similarly, I think some of the large companies, also have taken the step forward to set up their global treasury centers out of GIFT City. Many of them manage cash pools, want to optimize their the cash management across the across various subsidiaries which are present in various jurisdictions, and companies like ArcelorMittal, ONGC Videsh, and many others have actually commenced operation out of GIFT City, and we expect that these numbers to grow in time to come. So our job as a regulator is to provide a truly global regulatory architecture which enables companies here to launch businesses with the least of the difficulties. And our focus has been on enabling Indian corporates, especially central public sector undertakings, to meet head-on the goals for Viksit Bharat at 2047. See, if you look at the goal for corporate India as part of 2047 is that we need to have more global champions from the corporate world in India. In fact, we can only name a few. I think it's just a very handful of companies which can probably qualify to call themselves multinational companies in the Indian corporate landscape. So I think 2047 is about more and more of the Indian companies, mid-sized and companies which can actually scale up to become global companies. And I see a lot of opportunity in some of the central public sector undertakings also to probably use their opportunity to scale up and become a global manufacturing or a service champion. And one of the very important inputs for becoming a global champion is obviously cost efficiency in operations. So we in IFSCA are focused on providing this cost efficient sources of capital, and our approach has been to keep the regulatory burden to the least possible while ensuring that our functions as a regulator is not hampered in any manner, to keep the regulatory burden at the thinnest possible level so as to afford that the cost of compliance and cost of regulation doesn't actually adversely impact the cost of financing as well. So our effort will be, and our thrust will be in that direction, and we hope to listen to all of you from time to time to understand your requirements and see how we could to actually support you in this exercise. So with these few words, I'll stop here, and I will say that congratulations to some of these CPSEs who have actually managed to make good business cases out of their operations in GIFT City. We will be happy to see how you grow and scale up. And we also look forward to more other CPSEs whose business cases do exist for you to actually use the GIFT City, in some sitting in Mumbai or in Delhi, but also perhaps launch a business out of GIFT City to expand your global businesses as well. So with these few words, I'll thank all of you and welcome you once again. I look forward to very active deliberations today, in this conference hall and outside as well. Thank you very much.
And now, it is my privilege to welcome Shri Pankaj Jain, Secretary Ministry of Petroleum and Natural Gas, to deliver the keynote address. Let's put our hands together to welcome him.
Good morning, and an absolute delight to be here in the presence of an old friend, Mr. Rajaraman, and of course, Dipesh is somebody I know from my earlier stint on IFSCA, and Rajshri, who's a colleague in the ministry. And again, a lot of familiar faces here. I think if I look back, my formal association with IFSCA ceased about 3.5 years back. But in those 3.5 years, I can only say that Rajaraman Saab is being modest in terms of the achievements of IFSCA. I think what IFSCA has done over the last 3.5 years is absolutely incredible. The kind of work which has happened there. Things which were only a gleam in somebody's eye, that aircraft leasing could happen in India. The fact that a large Indian organization need not travel anywhere for rolling over its international borrowings. All of that you could do sitting here in your office or sitting just at best in IFSC. All that became possible in ways we never imagined were possible. So look, there's a longish history as far as IFSCA being set up. It was set up quite a few years ago, and what I can say is that much of the hard work has been done. In terms of regulations, when we were doing those regulations, it seemed very esoteric at times. It seemed difficult to imagine that these will ever be used. But over time, what has emerged is not only have they been used, they have actually been very, very useful for companies in this space. The fact remains that IFSCA is not giving you a regulatory environment which is regulation light. It is giving you an environment which is a unified regulator. And there's a world of difference. This is not to say that we can do regulatory arbitrage. The regulations which IFSC does, in fact, mirror the best-in-class regulations both of local regulators as well as international regulators. So it's not that you think that you can go there and somehow there is a walled garden in which less rules apply. The rules apply exactly the same way. They don't lack any rigor. If anything, there's actually more rigor. But it's just that because a unified regulator, life becomes that much more easier. You don't have to knock at different doors. The timelines become compressed, and that is where the real strength of IFSCA lies. And one of the philosophies which has always been underlying the way IFSCA has worked, and again my compliments to them on this, is that from day one IFSCA has been asking itself this question: who is our competitor? Who are we competing with? IFSCA has no competitor in India, and therefore you can always get into this trap of thinking that, whatever I do, how does it matter? But because from its inception they kept benchmarking themselves against not just IFSCAs elsewhere in the world, whether it is London or Singapore, but fact is they kept telling themselves that if a certain transaction is possible in London, in Singapore, in Hong Kong, or in New York, how do I make sure that that same transaction can be done here? So if aircraft leasing was happening in Dublin, why can't it happen here? If a ship leasing is happening somewhere else, why can't it happen here? If somebody has to raise $5 billion, why can't it happen here? And that philosophy has actually helped them in terms of, because what they did was they actually ended up creating a microcosm of India's entire financial and insurance sector in one place. And that, it was an impossible thing to do, but they've done that, and that is why it is possible to deliver on some things like this. Now, when you do that, why do you need to get central PSUs or large corporates? Yes, they are your customers, all that is fine. But see, we keep forgetting that in comparison to our needs, in comparison to what we need to invest in, where we need to go, we have traditionally been a capital-starved country. We've traditionally been short of capital, and we've always struggled to get that. In fact, for many years, our private sector was not growing because they couldn't get enough capital. Our public sector was not getting enough surpluses to be able to do that. And even as deposits grew, this entire concept of seamless disintermediation which needs to happen in this space was taking its own time because banks had their own crisis to go through. They had their own NPA cycle, which meant that lending would come to a standstill for many, many years. In the meanwhile, the requirements of private companies, the requirement of CPSEs for efficient capital, for access to global investors did not stop. And I'll take you back to a time when a lot of private companies in India would actually be doing fundraising abroad. They were doing fundraising abroad, they were also getting burnt when currency movement would happen in the wrong direction. Part of the reason was they were given wrong advice. They didn't really understand the risks involved, or they only saw the good things, they never saw the downsides which were possible. And at the end of the day, they were a small fish in a very big market. If you may be big in your own country, but when you're going to a London or to a Singapore, you're actually a very small fish there. And people know that you're gullible. People know that you're rookie. And you will get taken for a ride because you're not going to come there every year. That is this thing which IFSC has helped address in terms of if there is a provider who's doing business in Gift City, he or she immediately will know that, look, these are the top companies in India. And these are the ones I need to do business with. And that is what immediately changes the entire regime. But it's not just about fundraising. It has been all other kinds of experimentation which IFSC has done. I remember some years back when SPACs were the flavor of the season. IFSC was there. Immediately they had a regulation for SPAC. Capital raising, Rajaraman spoke about global treasury centers, AIFs, insurance services, IBUs. I don't have to, reel off all of those. But fact remains that in the oil and gas space, if I look at that as an illustration, whether it is the various SPVs or the unincorporated JVs in different countries, different currencies, which OVL does, the kind of crude import which IOCL does, the kind of unhedged exposures which many of our oil marketing companies have when they are buying crude, all of that finds a natural home in IFSC, and that's what makes it absolutely invaluable. But having said that, why is it that we are still talking of just a OVL or just an IOCL or just 5 or 7, maybe an Exim Bank, because Exim Bank also used to have a London presence, which they've done a lot of fundraising now from here. Why is it that we are still talking of a handful of such names? Why are we not going beyond that? What is holding us back? I think the first thing is we need to get some of our inhibitions out of the way. There is a learning curve in this for CFOs and PSUs, for CFOs in private sector. We have to understand that currency movements currently may be discouraging you from looking at it. A stronger dollar may mean that, oh, you want to wait for volatility to settle down before you start looking at it. But if you look back over the last 8 to 10 years, I think rupee depreciation has actually been far less than hedging costs. For people who had borrowed overseas over the last 5 years, 7 years, they actually would have ended up borrowing much cheaper even after accounting for rupee depreciation. So there will be phases when in a year or two, yes, you might feel you're out of pocket, you should have hedged. But overall, the kind of instruments which are available through Gift City give you far greater opportunities, far greater diversity which you can bring in, backed by the fact that IFSC, because it's a unified regulator, is far more nimble in terms of being able to respond to emerging things in the market. That's what makes a difference. But having said that, I think there is still a big role which IFSC itself has to play, which is in helping demystify to a lot of corporates what this actually means. We continue to have a lot of CPSEs with global focus. You just scratched the surface. We continue to have CPSEs with very large projects. When I say very large projects, even today, we are looking at projects which will cost us 1 lakh crore each. We are looking at projects, 60, 70,000 crore projects, quite a few. I'm talking of even projects straight away, and I know some of you in this room will know the projects I'm talking about. Now, a 1 lakh crore project, you will find that you will have to go overseas for some kind of borrowing. Indian banks will not like to take the risk, or will not have enough capital, or actually more than capital, it will be single party exposure limits which will come in the way. Now, what does that mean? Which means that you also get in line somewhere in a London or a Singapore, or you want to be a big fish here saying that, look, I'm coming here and I want to do these projects. The kind of capex investments which government rolls out every year, and you've been hearing it in the budget, 10 lakh, 11 lakh crore. This is year after year. at some point of time, there is no choice but to look at international borrowing. And the only way you can do that very efficiently is through GIFT City. Both raising of debt money as well as over time where equity has to be done, all those things become possible. There will also be large rollover requirements for many of you. You get much finer pricing because of the fact that there's actually reasonably good competition available here. The same Indian banks who are sitting on dollar deposits, who would like to lend and who would be happier to lend and do the operation here. So that is again something which works very well. But I think we'll have to make that happen. All of us have a collective job of clearing the cobwebs of our mind, becoming more familiar with what is happening. There's a unique opportunity which IFSCA presents in terms of knocking off those few basis points from your interest costs, because those few basis points matter. Reducing some of the currency risk and making sure that you are actually getting a best deal. So I would therefore urge all of you and implore you that if you are CPSEs who have any kind of interface with the rest of the world, whether it's in business or it's in raising money or it is in ownership, there cannot be a better way to do this than through IFSC, who has actually proved very adept in terms of responding to the challenges which many of you face. And I really look forward to the next phase of the journey of IFSC. It is exciting because I think there is so much more that they can achieve in terms of size and scale. And we've just started. The real exponential growth lies ahead of us, and I wish them very best in this journey. Thank you very much.
Thank you, sir, for your insightful and inspiring words. We deeply appreciate your time and presence. To conclude the inaugural session, now I invite Dr. Dipesh Shah, Executive Director, IFSCA, to present the vote of thanks. Please welcome him with a round of applause.
Good morning. Let me take this opportunity first to thank the Secretary, Ministry of Petroleum and Natural Gas, Government of India. Sir has been always instrumental in making sure that the IFFC keeps its focus on the global regulations and benchmark with the global best practices. I recollect, sir, in several deliberations in the initial days of the IFFCA board meetings, he always used to tell us that why you are looking at the domestic regulation, you have to also see what Singapore is doing and what others are doing. So, sir, thank you for that continuous support and guidance of making sure that the IFFC always thinks in competition with what is happening in the global market. And, sir, your today's address is also very appropriate for many of the CPSEs who are thinking of how to utilize GIFT for their advantage. In the morning, Chairman and myself, we had a meeting with one of the foreign bank. And sir, to our surprise, the foreign bank told us that one of the largest corporate in India is borrowing in billion plus. And he has only put in his request, only the GIFT City banks should participate. So that is the type of the confidence that the Indian corporates are now putting in terms of the gift borrowing. And I'm sure the CPSE, which borrows large number of amount, would also consider having first look at the GIFT City competitive borrowing cost, and if they are not, they are always able to borrow from outside. But I think the GIFT is that way now offering a very competitive advantage. I also take this opportunity to thank the ONGC chairman and his team for having us here itself. I think it was much easier to organize in Delhi, and the ONGC offering this venue came at very handy for us, and also for the CPSEs to attend today's event. We also apologize to the ONGC for any miscommunication during this entire planning of this event and hosting of this particular CPSE event in your premises. I also take this opportunity to thank the OVL MD and CEO for his continuous support Whenever the IFFC has looked at the ONGC, I think they've always raised their hand, and his team has always been very instrumental in supporting the IFFC whenever we needed some support from this side. We are also thankful to all the key speakers which I see today here. They have traveled all the way and they are willingly agreed to share their experience of setting up, probably giving the guidance to others as to what all they've seen and what needs to be further improved. With this, we thank all of you, all the participants, for taking your time out and be with us. At the last, I must thank the chairman IFFCA. He was not well. He had a fever yesterday, and also today he was not well morning. But he made sure that because we are committed for the CPSE event in this 2.0 in Delhi, he specifically traveled early morning flight to Delhi and make sure that the event is held as per the time. Thank you all for your support, and thank you NGC for having us here.
Thank you, sir, for sharing your valuable words. Before proceeding further, I would now like to request Shri K. Rajaraman, Chairperson, International Financial Services Center Authority, to kindly please present a bouquet and memento to Shri Pankaj Jain, Secretary, Ministry of Petroleum and Natural Gas. Thank you so much, everyone. Also, I would thank you so much once again, everyone. Also, now I would like to request Sri Dr. Dipesh Shah, Executive Director, IFSCA, to present a bouquet and memento to Sri Rajeshri Gupta, MD and CEO, ONGC Videsh Limited. Once again, can we have huge round of applause, please? Thank you so much, everyone. I thank all the dignitaries for their valuable words, and let's now proceed further. Thank you so much, everyone. Thank you so very much. We really appreciate your time and presence. Ladies and gentlemen, we now move forward to our first session of the day, Opportunities in Gift IFSC. This session will offer deep insights into the regulatory framework, investment opportunities, and financial structures that PSEs can leverage at Gift IFSC. To begin, I invite Executive Director, IFSCA, Shri Dr. Dipesh Shah, who has played a pivotal role in shaping GIFT IFSC. Sir, may I please request you to please join us on stage and share your insights.
Good morning. As I said, I'm not going to take much of the time. I think there are a lot of experienced people who are going to speak today, but we thought that it would be appropriate just to highlight some of the key developments in last 3 to 4 years, as the Secretary just mentioned about the growth at the IFFCA and how it has been moving towards becoming a global financial hub. So I'm skipping some of the slides, but probably come to the slide which is most important for all of you in terms of what the IFFC is trying to achieve. I think this was well laid out by the chairman IFFCA, that the IFFC is trying to help India through its contribution towards the financial services, and also to onshore various services which have gone offshore. And in today's scenario, we can see the IFFC now able to do this through a very different regulatory structure that it presents. When you see on the screen now in the IFFC, when you transact, you are transacting as an offshore to an offshore non-resident. And this is, I think, the beauty under the FEMA, which now present the IFFC as a non-resident zone, and thereby allowing to transact freely in foreign currency. So to many of the CPSEs today present, I think this provides you a great opportunity. Instead of going to the other competing financial centers outside, you can transact with your own financial center in foreign currency freely. Many of the entities which are set up in the IFFC been offered tax holidays. In fact, out of 10 years, there is no tax on the business profits that you earn. And the borrowings, when you do from GIFT City, there are no withholding tax. So again, that really provides you an advantage of borrowing from the GIFT City zone versus outside. IFFC, as I think all of you are aware, is a unified regulator combining, as Chairman mentioned, the powers of all the domestic regulators into one. And this is really now providing a lot of advantage in terms of able to transact freely in this foreign currency. At the IFFC, what has been done is the regulations which have been issued have been all benchmarked with the global best practices. And you can see the regulatory regime very well defined in the IFFC zone in terms of what has been done. Several institutions, global and Indian, are now present. We already spoke about the OVL and private and PFC and IOCL present, and we have also seen Shipping Corporation of India also present in the IFFC. Apart from that, you can also see sizable number of global institutions present in the IFFC zone. In terms of tax, I just mentioned that out of 10 years, there is no tax on the business profits that you earn. There is no GST, this being an SEZ zone, and thereby providing a lot of flexibility of undertaking international financial services freely. This was what I was talking in terms of what the Secretary just mentioned about the growth at the IFFC in last 4 years or so. Particularly in last 1.5 to 2 years, we have seen an exponential growth in several segments of the IFFC zone. You can see from mere 129 units to 750 plus, almost 480 plus percentage jump in last 4 years of the registrations happening in the IFFC zone. You can see the size of the banks, which were 14 to now 28, and we just in principle approval to a bank in UAE, which is now setting up, so it becomes 29. And the banking asset size from $14 billion to almost $78 billion now, which is again a testimony to how the banking ecosystem, including the ECB and trade finance, are all moving into the financial services zone. And that's where probably the CPSEs today should look at aggressively as to how the gift can be in solutions to their offshore borrowing sitting in India itself. Banking transactions, payment service providers, which is a new regulations which have come in, is already seen 5 institutions registered for the services. On the capital market side, I think the numbers are also encouraging from $63 billion, almost now the debt listing. And on the green and sustainable financing, we have almost touched more than $15 billion of listing. And credit to many of the CPSEs present today. I think you have been using this very effectively. Today we have the team of India INX and the NSC both here, which has been listing these bonds on their platform. And this has been a great success because of the CPSEs involved in listing of several of their bonds in the IFFC zone. We have also seen continuous growth in the turnover on the IFFC exchange and the launch of new products, which is now making more and more business coming into the IFFC zone. And also on the fintech side, being a unified regulator, several fintechs have been onboarded from several countries into the zone. On the insurance, I think this is a piece that the CPSE may also like to consider. Any of your dollar insurance or reinsurance requirements, you can also look at the GIFT City now. And this probably will add a lot of value, considering that the insurance business has also been started moving very rapidly in the recent past. Aircraft leasing, we just saw 33 companies registered. We were no regulations few years back, and suddenly you have 196 assets which have been leased into India. And ship lessors have also come in a number. We have almost 22 ship lessors now, and 13 ships leased into the IFFC zone. Our banking regulatory head, Supriyo, and the regulation team led by Riddhi Bhandari is also, they are also here today in this conference, so you would be able to, talk to them and ask about your queries in terms of setting up in the regulations of the IFFCA in these several verticals that we have. On the fund management, I think the business has been very rapidly moving. You can see almost 138 fund managers and almost 198 to 200 funds registered in the IFFC zone, with almost the increasing volume of the investment opportunities that they are seeing in India and outside. We've also seen the bullion exchange operational now, and they've been adding a lot of value in terms of the bullion imports and also the delivery of the bullion depository receipts to the bullions to the depository receipts. We also host now 3 foreign universities in the IFFC zone. In fact, 2 Australian university and 1 UK university has already been licensed, and we are seeing 2 more UK universities going to set up in 2025 in the IFFC zone. I think the Global Treasury Center is something you should look at, and this is a new avenue which is now come for the corporates, including the CPSE. We also have a regulations for bookkeeping, accounting and taxation, which is again been used by the several entities in the IFFC zone. And we have almost 60 plus service providers, professional service providers now registered in the IFFC zone to undertake and guide you for setting up your operations in the IFFC zone. With this, I'll hand over probably to Asutosh, who has more information and slides around what the CPSE can actually do in terms of your businesses in the IFFC. With this, I hand over back to the moderator, and probably to all of you to raise questions wherever you feel that you want to, need more inputs in what the IFFC can offer from the IFFC zone. Thank you very much, friends.
Thank you so very much, sir, for your valuable words. Proceeding further. Next, we have an expert who has been instrumental in driving policy initiatives for PSEs at GIFT IFSC. It is my honor to invite Shri Ashutosh Sharma, Chief General Manager, IFSCA, to take the stage and enlighten us on the vast opportunities available for PSEs.
Thank you, ma'am. Very good morning to all of you. Thanks for coming in. Thanks to ONGC for again providing this facility to IFSCA. I think Secretary Sir and Chairperson both, they highlighted different areas. They highlighted different areas through which corporates can tap opportunities in GIFT IFSC. I like to classify them into 2 different segments. That there are opportunities which you can tap into IFSC while you are present in domestic zone, and the kind of entities, the kind of mission that CPCs are running for the growth of country, whether you talk about 4x growth in the port capacity, 7x growth in the aviation capacity, and all these require significant amount of capital. And this capital or corporate finance requirements, something that you can certainly tap into GIFT IFSC ecosystem. So one will be debt category. Second is IFSC is known as a financial center. So what are the opportunities for corporates? We spoke about Treasury Center. So that's one area we'll look at. On the corporate finance side, I think loans, ECB and trade loans. And again, Secretary Sir mentioned that IFSC has made a lot of strides, and the page you also highlighted the kind of growth we have seen. But I was looking at some number. When I look at ECB loans in September 2024, total ECB loans for India was $190 billion. Out of this $190 billion, almost 37% is from PSUs. By now, considering the withholding tax advantage, the tax advantages, all the loans, because the pricing interest rate have also changed, they should have been shifted to GIFT IFSC. But the asset size in GIFT IFSC right now in terms of total lending is $50 billion. So I think there is significant opportunity in this space that CPCs can look at refinancing their existing book, long-term, short-term, both kind of assets. They can look at this space. Second is factoring. Factoring is again a new market. IFSCA today you will hear from one of the ITFS platforms which will explain the factoring product and how we are trying to tap it. But this is again is a new domain. Now, the way India is growing, the India has grown, lot of confidence is coming in the exporters in the world. So LC-backed or letter of credit-backed trade shall reduce and open account will increase. And from those perspective, factoring kind of solution become very critical. And the way it has supported the growth of some countries in other Asian region, this product has huge opportunity, and you can tap this opportunity in IFSC because enabling regulations and the financial ecosystem has been already developed for this space. Then we talk about insurance. Indian companies have been taking insurance, whether it's for the EXIM trade, whether it's for India requirement, reinsurance. Indian CPSEs also, when they position their employees offshore, they have been tapping the insurance solution from outside. Now we have Indian companies which are offering dollar insurance and reinsurance solutions. They are based in IFSC, and these premiums are already being written. This is ongoing business for last 6 to 7 years. It's coming out as a very mature ecosystem. I encourage all the CPSEs to look into these opportunities as well. Derivative, again, when I looked at the ECB, I looked at some of the facts and saw that while CPSEs has 37% share in the ECB loan, but when it comes to hedging portfolio, the share of CPSEs or PSUs was even less than 25%. Apparently, the point which Secretary Sir also mentioned and highlighted that some of the Indian companies were burnt their fingers in terms of hedging the risk. But this market is evolving because with these 29 banks which we have in GIFT IFSC, a lot of them have established their treasury centers, and they're providing markets solution, including global markets, G7 currencies, OAS and DOAS kind of solutions are being offered by the banks there. Capital market we discussed about equity and debt listing. Debt listing is very successful. Earlier, most of the Indian companies were going into Luxembourg exchange, Singapore, some were also going to Tokyo exchange. Now incrementally, because again you will hear about the tax advantage, but there is a reason why all the companies, when they are raising the bonds, they should be listing on IFSC exchange. There is certainly a advantage on withholding tax on the coupon payments there. REITs and InvITs is again a market that need to be developed because this is a new product, and a lot of Indian companies, when they require they so far are tapping the REITs and InvITs in the domestic market, but as India's requirement for the capital is increasing, you need to diversify and combine the domestic and offshore capital together into this. Ship, aircraft leasing and financing we discussed. I will try to explain them with some structures. Treasury Center, again, it's a very important topic which Dipesh ji also highlighted just shortly before. And then holding company, investment company, which OVL MD also briefly talked about. But a lot of companies, Indian companies, have been establishing holding structures in Singapore and other jurisdictions. Now it is possible to establish investment vehicles within GIFT IFSC, from which you can invest into your offshore subsidiaries or vehicles. Apologies, technology is keeping me away from you. Yeah. We have a finance company regulation. I will not delve deep into this because Shupri will be covering this shortly, but effectively it provides you different solutions, including the lending, securitization, and factoring and forfeiting. But within this finance company solution, you have a treasury solution, and a treasury as such, it is very evolved product. I think when we look at some of the centers like Singapore, Hong Kong, or other jurisdiction, even in North America, we see that treasury is being used it started as a payment processing units decades back, but now it has evolved into a very advanced model because they are doing risk management, financial risk management, they are doing the financial reportings, and they are also managing the cash, they are bringing in the financial structures. So this model is a very critical model for companies which want to play globally, and this has been enabled in GIFT IFSC. One of the item is re-invoicing. Within the Treasury Center, you can do the re-invoicing, and IFSC has given some FAQs on this as well. This re-invoicing again plays a very significant role when you are exporting globally and you have a global supply chain. Apart from this, there are various ship owning we discussed before we brought the ship, and some of the facts again is that 95% of India's EXIM trade is handled through a maritime route. Out of this 95% trade, 95% is moved through foreign ships. So effectively, we are a country which is paying on the rent for moving our own goods, and even our energy resources, they are plying on the rented ships. Time has come where India can increase the ownership structures, and we can bring the ownership of vessels into the country. And GIFT IFSC brings the opportunity for you to bring the leasing structure where oil companies, they can establish in IFSC through JVs, or shipping companies can establish their own companies in IFSC. They can concentrate or triangulate the demand from the Indian oil PSUs, and enable the leasing of vehicles and bring the ownership also in IFSC. And the financing can be done again from IFSC ecosystem, and transactions have happened already in this space. I'm intentionally not going into the tax part of it, because you have PwC and EY which will be talking subsequently about it. But two models in shipping again are possible, where you can lease in and lease out the shipping vessel. Other model is that you can own the vessel and then you can lease it into India. So one is capital light, other is asset heavy, and you can create a hybrid of both as well. Refinancing, I mentioned that it is very important part. Again, it is important because as the interest rate have moved down in between, and when it go down, you are going for refinancing. When you go for refinancing, you can certainly look at the place where you're going to pay the lowest withholding tax on your coupon payments. And this, I suggest that the page you also highlighted now, Indian corporate, large corporates, when they're running several $1 billion of deals, they are mandating that only banks which have a branch in IFSC should participate on such deals. When Indian corporates are driving such capital efficiencies, we encourage that CPCs should look into their portfolios and see how they can tap into IFSC ecosystem. I remember there was a time around 3 years back when people were asking, banks were asking questions about what are the opportunities here. But in last 1 year, what I have seen is that merchant bankers who were running the DCM mandates for the corporates, they have been doing the road shows with their clients in GIFT IFSC. So the time has come where earlier when the companies were going to Singapore and Hong Kong for the road shows, they are not coming to GIFT IFSC. So it's a good coverage ground. And if you have a treasury center in GIFT IFSC, you will certainly have an advantage of tapping into all the foreign bankers in this ecosystem. With this, I'll take a pause, hand it over back to MC. Thanks a lot.
Thank you, sir, for your insightful and inspiring words. Proceeding further, regulatory clarity is the cornerstone of a strong financial ecosystem. To guide us through the regulatory framework for finance companies and treasury centers, I invite Shri Supriyo Bhattacharya, Chief General Manager, IFSCA. Sir, the stage is all yours. We all are waiting for you. Thank you so much,
everyone. Good afternoon, and thank you for joining us today. So I think briefly, Ashutosh has covered some part of what I'm going to present. So that is the structure for setting up a global treasury center. So global treasury center is not itself a structure. It's a part of a structure which we call as a finance company. The equivalent in onshore India would be an NBFC. So an NBFC equivalent structure is created, and then one of the ways you can undertake transactions is being a treasury center. Yeah. So just to make a few points before I go into the presentation proper, is that I think that is one theme that is coming across with what the Honorable Secretary also mentioned, that to look at GIFT City today not as a place where you can only borrow or probably only lend, because over the last 4 years, now entirely self-sustaining ecosystem has grown up in IFSC, which was earlier not there. So now you can do all your transactions in one place. So like as it was mentioned, you can borrow, you can lend for those who intend to do that. You can take insurance, you can hedge, you can, even those who allow you to take positions, you can take positions. So a lot more avenues have opened up. Banks, which is the most important part of a treasury center, because you need a bank with sufficient technology to support your treasury center operations. Bank have upped their game. They are now ready to support you, because without their support, it's really very difficult to do. And I'm talking about both international as well as Indian banks who are there, are ready now to support this kind of transactions. So coming back to the presentation, for those of you who are interested in setting up the GTC, you would need to set up as a finance company, which is an NBFC effectively. And if you see, there are two-step process where you first get a provisional registration and then go on to a final certificate of registration. And the timeline is for us actually that we have to complete the process within 90 days. But that demands that your submissions are clean and there are not too many back and forth asking for information. If everything is in line, we are expected to register you within 90 days. But generally our experience is it's 45 to 60 days that we are able to process the applications. You can be a company or a branch. The benefits, I will not go. The transactions are, you are permissible in 15 currencies. And you can, your expenses can happen in INR because it's still part of India. For that, you can open what we call an SNRR account with a bank in India. And who, this is an important point, I think, who can be the service recipients. So I think this is, actually there is a framework that is undergoing a change currently, and we are in the process of reviewing it. Hopefully by this month, we should be able to release the new framework. So part of it is not in the current framework, but this is what is going to be happening in the new framework. So a wider range of entities who can be served. You can serve your own group entities. You can serve the parents' group entities. And the requirement is all Gs have to be from a FATF compliant jurisdiction. And if you want to serve your companies in India, you might have subsidiaries in India as well. You can serve them as well, provided because it's a cross-border transaction, and the GTC will be treated as a person resident outside India under FEMA. Transactions with the resident entities will have to be subject to the FEMA guidelines. So if the Global Treasury Center is lending into your subsidiary in India, that will have to be through the ECB route, where all those requirements of the maximum lending rate, the period of lending will come in. But if you are lending to entities outside India, there are no such restrictions. You can take a commercial decision on that. So these are some of the exemptions that are there. We are largely dependent on the board-approved policies because this is an institution that is set up by a company to serve its own. So the regulatory impact here is much less. So we will not be extensively regulating or supervising you. We would essentially want to see that you have put in place the board policies to guide the function. So we will not be putting too many requirements on you. There's a minimum net owned fund requirement of $0.2 million. And these are the fees that you will have to pay to the authority. Oh, sorry. sorry. It's 12,500. Yeah, so that's a mistake. Yeah. That's the proposed one. So we are, yeah. So what can they do? Basically, you can borrow, which is one of the main purposes many GTCs set up. You can borrow and then you can lend to your own intra-company borrowings and deposits. Then, of course, you can lend. You can provide guarantees on behalf of your subsidiaries or performance bond or any other credit facility. We have tried to define it in the widest way possible so that even transactions which in future may come in, you can do. You can invest in financial instruments like stock, shares, bonds, or any other type of financial instruments as your policy permits. So that's the focus there, that your policy is the guiding rule for you. So ONGC might have a policy, IOCL might have a different policy, so we are okay with that. as long as the transactions are done as per the policy that each company sets up. Derivatives, of course, you can do. There's a large market now for OTC derivatives in IFSC. Uh, uh, and the main benefit is counterparty may be inside or outside IFSC. Why is this important? Because let me tell you, for example, many of you companies you want to do commodity derivatives. Now, you know, India, commodity derivatives are not allowed. Banks cannot write commodity derivatives because it is considered as dealing in commodities. So in that, although we are trying to solve that problem too through a different route, but that's maybe a bit farther off. But till that time, you sitting in IFSC can face a bank in a jurisdiction or a non-bank for that matter, who's allowed to do commodity derivatives. Factoring and forfeiting, for those who are interested, is another area that is coming up. Export factoring is growing in IFSC, and you could be a part of that. And as just decided, already said, reinvoicing, as long as you don't take physical possession of the goods, you can do reinvoicing. Where does this physical possession bar come in? Because if you see our name, it's Indian Financial Services Center. So that's the requirement, that everything that an entity does in IFSC has to be a financial service. Financial services defined in our law. There are some activities have been defined as financial service through a notification by the Government of India, but physical possession or physical transaction of goods is not a financial service. So that's where this restriction is coming from. Then another important part which you will allowed to do is pooling of funds. That if you are globally, you are receiving funds, you can pool them in IFSC. The header account has to be with a bank in IBU, and this is where a lot of banks are now ready to provide you that service, because it's a largely technology-driven sort of a process. Then optimizing cash flows, managing supplier relationship, and then act as a holding company. Apart from this, if you want to set up a subsidiary only to be a holding company, you can roll it into the treasury center. And apart from that, the final activities are maintaining relationships with financial counterparties. If you have subsidiaries of obligations, you can manage them from the GTC. Advice, financial management advice, and advice relating to various areas, including financial funding and capital market activities. Quickly, the same process as for any entity set up in IFSC. You form a company, or in your case, you can also come as a branch. You identify office space. That's important, because without office space, you will not get a license. So you have to be physically present there. Which then once you get an office space, the lessor will give you a PLOA, which is effectively a proof that you have sort of entered into an agreement with him to take office space. And then you submit this application through. There are two entities which have now been rolled into one, IFSCA and SEZ application, and it's totally online. There's a portal called SWIT, which was inaugurated by the Prime Minister last year, where you submit all your documents, and it comes to us, and you get updated about where the application is. If you have any queries, we will come back to you through the SWIT. It's entirely driven. Your fees also can be paid through this. Then you obtain a LOA. Then you come to us, and we give you a certificate of registration, and you start business operations. As I said, the SEZ authority as well as the IFSCA authority expects the process to be completed in 90 days, and we generally have been well within that. I think this is cutting across what are the benefits across various areas. Of course, the tax attractiveness is there, and I think maybe others will deal with that. You are a single regulator, lower regulatory reporting. And for GTCs, I can tell you our regulatory expectation is essentially that your policies are being followed, because we don't intend to tell ONGC how to hedge or how to manage its business. So we want to ensure that you have the policies and the policies are being followed. But broadly, that is what we are going to do. And the infrastructure, of course, goes without saying. Incentives from the government, capital market access, banking and currency, banking factors and currency environment. Banks have really come up in a big way, both not only in terms of volumes, but also in terms of what activities they can do. Talent pool and skills, this is also an area where IFSC has focused, and it is there, it's growing, and with presence of, your presence also would help there. And of course, it's a centralized location, and the advantage that India has, that it covers Asia as well as Europe and some part of US time zone as well. So that's as far as GTC is concerned. Thank you. We have a session in the afternoon where Riddhi will be taking, and maybe we can have questions at that time. Thanks.
Thank you so much, sir, for sharing your valuable words with us. Well, ladies and gentlemen, let's proceed further. Debt markets and financial instruments plays a crucial role in capital expansion to provide us with valuable insights on debt listing and opportunities in IFSC exchanges. Let us welcome Shri Vijay Krishnamurthy, MD and CEO, India INEX. Can we have a huge round of applause for the gentleman, please?
Good afternoon. Thank you, IFSCA and CPSE, for giving us this opportunity to showcase what lies ahead as opportunities in GIFT IFSC, and for us to showcase what we have been doing at India INX, helping foster companies raise capital through both debt, and now we've also ready to facilitate companies raising capital on the equity side as well. So moving ahead. So we were the first exchange at IFSC, inaugurated by the Honorable Prime Minister Shri Narendra Modi ji. So we are 8 years into existence, from 9 Jan 2017 till now. And in this journey, I think so we have, I would say partially achieved the vision that Honorable Prime Minister has set, which is, one is to become the, price setter for one of the, most traded instruments globally, which could be equity, commodity, currency, and anything. In that, possibly, we have taken one step forward very, very recently in terms of launching Sensex derivatives contracts at GIFT IFSC, which is there in the domestic market. But this, this contract enables trading in USD, which really helps, realizing the dream of allowing foreign participation or EFIs into these Indian story or the Indian growth story. So it becomes very convenient for the EFIs to really participate, the foreign investors to really participate in the India growth story through Sensex derivatives traded in USD. Apart from that, the second vision that was set by our Honorable Prime Minister was that IFSC should enable raising of capital for companies across continents as Asia, Africa, Europe. So here I think so, within Asia and particularly India, we have seen, issuers, especially in the last couple of years, whoever has been raising foreign capital has been, coming to IFSC to raise capital. So in that sense, I think so we have, we are taking the right step forward in terms of trying to realize the vision which is being set by the Honorable Prime Minister. We are just started, and I think so there is a long way to go, but in the realization of dream of Viksit Bharat of 2047, I think so IFSC and India INX plays a very, very important role in terms of capital raising and facilitating raising of capital. There are some firsts to India INX, and very, very recently we touched 150 debt listings at India INX, so which has been a significant step and a milestone. And I would like to say that apart from reaching that, we are also having a dedicated platform for GSM, platform for green sociable socially linked or sustainably linked bonds, which is the ESG bond. So we have a dedicated green platform. The good part is we have 22-hour trading window, which enables being a international financial center. It makes sense that we need to provide a proper trading facility across all the trading jurisdictions, which is the Africas, Europeans, and the Americas. So, so that's a 22-hour trading window there. What's the product portfolio that we have? So we are a typical exchange, right? So, and we offer everything that an exchange does. So we have a portfolio for equities, debt, as well as derivatives. Equities, there has been the regulation which has been really recently put up by IFSCA on in the end of August 2024, which enables global listing of equities through direct listing route, and that is what we will see. On the debt side, we raise anything including the masala bonds in INR, foreign currency bonds. Now, of course, regulations for CPCDs have got included, so that is another thing which is added. We have international financial centers like ADBs coming and raising capital there. We would like to say that from a capital raising perspective, if we very truly and strongly facilitate a very seamless, efficient, and a paperless kind of an capital raising, at least on the debt front. Equity, of course, we are yet to see any companies come and list, but happy to share that we are in discussions with a few of them, wherein and keeping fingers crossed, we should really see some equity companies being listed there. On the derivatives, we just spoke. We have the index derivatives. Very recently launched the BSE Sensex 30 there to be traded in US dollars. So there's a huge opportunity for people to really be part of the India story. We have the commodity as well as the currency derivative contracts which are available on our or which is live on our exchange. Just to touch a brief about the listings on the equity side, which IFSCA came out with in August, on August 29, 2024. Now, so which are the companies who can come and really list or raise capital in equity there? So companies who have been incorporated in IFSC, companies incorporated in India, there is an asterisk there because right now the regulations only permit for unlisted Indian equities to come and raise capital there. Of course, there is a provision for raising of direct listing of even the listed Indian equities. Operational framework is being awaited from the domestic regulator, and post which we'll be able to enable that at IFSC and India INX as well. And the last one is companies with which is incorporated in any foreign jurisdiction other than India. So all these companies right now are eligible to raise equity or do equity listings at GIFT IFSC. What are the key regulations or some of the highlights? This is in short that we wanted to put it across. At IFSC, you can only do 10% of dilution of your equity as compared to 25% on the domestic market. There is no minimum requirement of investors being there. You can have a single investor invest in the entire proceeds. Issue can be open for a minimum of 1 day to a max of 10 days. For the unlisted Indian companies, it is important that it is mandatory that capital needs to be raised only through the book building process, and they should have a positive net worth. Issue necessarily needs to be handled by a lead manager or arranger or a merchant banker who is IFSCA registered. And the good part is the discretion is given to the issuer or the lead manager to really decide on who are the investors who can, category of investors who can participate, the method of allotment as well as the mode of collection of the subscription in the IPO. So these are the flexibilities which are available for companies to come and raise capital. Now I'm very sure that not everybody would want to come and raise capital in a foreign currency there. So who are the what we feel is Indian listed companies but having subsidiaries which are unlisted but have businesses abroad and they deal in foreign currency. So GIFT IFSC becomes a very good platform for somebody to really come and raise capital, because here again, you don't have to dilute your 25%, you can only dilute 10%, raise capital, and there are significant tax and cost advantages which are available. Or, you could be, having subsidiaries abroad, and you would want to, without further or significant dilution, want to raise capital, definitely that can be done. So this jurisdiction, is favorable or is suitable for companies who wants to raise equity, having interest in foreign currency, they are dealing in foreign currency. So this becomes a very good jurisdiction for somebody to really raise equity. Coming to debt, we are happy to state that we are the leading exchange for listing of debt securities, and you would have seen that we put numbers till 23-24. Happy to show that in 2024-25 we have 41 listings that has taken place, which is a very, very significant number, and we have raised to the tune of, if my numbers are not correct, up to 1.35 to 1.40 billion of USD is what God has raised in this current financial year up to December of 2024. So there has been a huge spike, and really happy to state that we have 56 unique issuers who are there on our platform to raise this and who have been raising capital, of which it's a very important number, of which 60% of the issuers have been repeat issuers. Right, so 60% of the issuers have come multiple times to raise capital at India INX for their debt proceedings, which means through the IFSC regulations as well as in the processes at INX, as there is something right that we are doing, that there is a repeat, repentance of these issuers really coming to us, and it's a huge number. It's a 60% of issuances. We have raised more than 60% or listed more than 60 plus billion USD, have an MTN program set of 82 plus billion. Unique ISNs listed are 150, unique issuers are 56. We also have a platform which is called as the INX Global Access, which provides access to Indian residents to through their LRS route to access global securities of across 150 exchanges. So it is through a single platform that you can access 150 exchanges across 33 countries with 23 currencies. And that's a very good platform for Indians through their LRS who really want to diversify their investments. Our derivative volumes are close to 9 trillion, and having a DDT of a little over than 200 million USD. Wanted, I guess, couple of, in the first session we had a very engaging session wherein, the dignitaries really spoke about the advantages of coming to IFSC and ECB versus IFSC. So just some of these points I just wanted to highlight was the cost of borrowing from an ECB as well as vis-a-vis an IFSC, it's a very competitive interest rate which is available. People really spoke about hedging and hedging costs. Since you're going to raise in USD, right, the money is going to be raised in USD, the currency risk is, very, very low. If not nil, it's extremely low. So that's a very clear cut and a great advantage for somebody to come to IFSC. If somebody is looking for foreign currency borrowing, it is good to come to this jurisdiction to raise their capital, because of the low cost of borrowing as well as, very low hedging cost. Regulatory flexibility, because the use of end proceeds, there is flexibility in terms of what is the use of end proceeds. The approval processes are faster, way, way faster as compared to an ECB, and the way that you want to come and raise capital and list on an IFSC exchange or at India INX, we enable very, very quick listing, and very clearly potential tax benefits, a 9% withholding tax vis-a-vis a 15% in a Singapore and a 20% in the domestic market. So it's clearly 6 to 11% of clear tax advantage that really one has. And that's also at India INX, the costs of the transaction costs or the listing fees are not very significantly higher when you compare it with so our competition is with the global exchanges. We are competing with the global exchanges like the likes of Singapore, London. So when you compare with the likes of Singapore and London, the costs that is available at IFSC, at India INX is far, far lower. So it becomes a really good avenue for somebody to really come and raise capital. Just wanted to put up this slide just to show and just some numbers. So when because it's a session where we have the CPSEs and the PSUs, would like to say that out of the 60 plus billion, there's a 43% share of capital that's got raised by the PSUs. And I would like to highlight one thing. Of the 56 unique issuers, there are only 11 PSE issuers who have come. But those 11 PSE issuers have contributed to 43% of the funds being raised. So which is a very, very significant number. So is there a scope for more PSUs to really come and raise capital? I think so. Clearly, with all the advantages that we have, we have shown here and put up here, the answer is yes. There is a good opportunity for the PSUs to come and really explore, how to raise, debt capital, if not equity, at IFSCA through India INX, and we'll be more than happy to handhold you and guide you in this entire process. Given that we have 150 listings, by now, the regulations, the processes, and all those things are typically something which is very seamless from our point of view, and we'll be able to guide you and get you done, take you through this in a very seamless manner, and time becomes very essential, and we'll be able to, help you list at record in record time. Speaking about green bonds, sustainability linked bonds, I think so there's a lot of focus, and we are in the auditorium of ONGC, and we really talk about energy and how do you really conserve and utilize, which is more sustainable, other things. So as I had earlier said, we have a dedicated platform that is for ESG bonds, and we are happy to share that there has been a significant spike in terms of from the year 2019 till this year in terms of the way the issuers have come and raised ESG bonds. So in the domestic market, we really speak about climate changes and other things and raising ESG bonds. So, and it's also the vision of IFSCA to that GIFT IFSC becomes the global hub for sustainable finance bonds. So that is the vision with which they are going about, and there have been a lot of regulations, and there have been a lot of provisions which have been made by IFSCA in their circulars, by way of their circulars, by way of the regulations, so that these bonds can even globally and within the Indian domestic jurisdiction, they can really come and raise these sustainable bonds in the IFSC jurisdiction. So right now we have 14 plus billion of ESG bonds raised, and we have 17 or 18 unique issuers who have raised these bonds with us. Would also like to share that from an ESG perspective, we have as I had already said, we have a dedicated platform. There's also a separate MOU that we have with Luxembourg Stock Exchange, which is one of the largest stock exchanges for listing of social and green bonds, and would be happy to state that a couple of the Indian PSE issuers who have raised their bonds here are part of the SOL list of Luxembourg Stock Exchange. What does this help? It gives them a good visibility globally, because Luxembourg being the largest stock exchange for the listing of such securities. Also would be happy to share that government is coming out with sovereign green bonds, and we have also introduced sovereign green bonds for foreign participants to be there and participate as part of this green initiative. We have our systems and processes which is already set and ready. Hopefully when the next tranche comes, we'll be fully operational, given that we are waiting certain things from RBI, the connectivity and other things. So some of the operational things should get resolved by the next tranche really comes out for the SGRB through INX. Some competitiveness, I guess, which I think so all of us would have really spoken about here is absolutely a brilliant tax regime here, which helps save a lot of cost. And in the current budget, Honorable Finance Minister has also extended all of these tax incentives by another 5 years till 31st March 2030. So that really paves way. There's a clear vision now, because I think so there was a lot of apprehension, oh, when will this tax exemptions go away? When will this be taken away? I think so there is a lot of clarity now in this current budget saying that all of these tax incentives remain till the year 2030. So there's a clear vision, there's a clear roadmap that one can really plan for, coming to IFSC. And very clearly, we spoke about the 9% withholding tax. That's very lucrative for the debt issuers to come onto the IFSC to list their bonds. Just leaving behind some of the marquee names, since we are at the PSU session, I would like to say, and at ONGC auditorium, so ONGC has been one of them to raise it. We have REC, PFC, SBI, Bank of Baroda, Canara Bank, all of these guys, apart from, of course, the big names like Adani's, Reliance, who have really raised, but PFCUs have really led it with 11 issuers contributing to 43% of the capital being raised is a significant amount. And honestly speaking, we look forward to more contribution from the PSUs to really come in and raise their capital at GIFT IFSC exchanges. And we'll be more than happy as India INX to take you all through, handhold you, and help you do the listing in a more seamless and efficient manner, right? So you can get details on our website, which is www.indiainx.com. I'm also leaving behind an email address, which is listing.sales@indiainx.com, where for any further details they could be written to, they can be contacted to, and you can be assured that you will definitely get a response within 24 hours. So that's how we operate, as customer first, and you'll definitely get a response within 24 hours with whatever queries you have. Thank you so much for your time and a patient hearing. Thank you very much.
Thank you so much, sir, for sharing such valuable insights. Now, before proceeding further, I would like to request from Shri Ashutosh Sharma Ji, Chief General Manager, IFSCA, to kindly please present a memento to Shri Vijay Krishnamurthy, MD and CEO, India INX. Ladies and gentlemen, can you have a huge round of applause, please? Thank you so very much. All right, proceeding further. Insights on financial structures for PSEs in GIFT IFSC. Strategic financial structures can enhance efficiency and optimize returns for PSEs. Shedding light on this, I invite Shri Suresh Swami, Senior Partner, PwC, to share his expertise with us. A huge round of applause for the gentleman, please.
Good afternoon, everyone. And I think it is 12:40, and I think all of us are going to be hungry. But I hope my presentation gets your attention, and hopefully it's interesting and interactive as well. So firstly, what I intend to present here is how can you access the GIFT City framework, IFSC framework, and what are the opportunities. I think a lot of that has already been spoken. Some of what I am going to speak may be repetition, so kindly bear with me. But I'm going to just present to you the whole thing in a manner in which it's simple for you to understand and conceptualize. So firstly, we all have spoken about ECB, loans from banks. This is probably your first access to Gift City without even needing to set up any presence. So we all talking about presence, but if you really want to experience the Gift City framework and how it is beneficial to you, this is probably the first thing to do. Go to a bank and avail the loans from the bank rather than going to a non-resident entity and taking a loan. Right? So here in this scenario, you don't need any physical presence. The physical presence has already been established by the banks. This is your first thing to do. And what it does is that, as you know, if you are borrowing from a non-resident, obviously there is a withholding tax which comes in. As far as these banks which are established in Gift City, they have a 10-year tax holiday. So when you are borrowing from them, there is no withholding. You don't need to pay any withholding. So therefore your cost of borrowing is not high. And as far as their sources of financing are concerned, if they are borrowing from non-resident, they are also not paying, the non-resident also not subject to tax. So their cost of borrowing also to that extent is lower. So a very simple method of how to really access Gift City without even setting our presence, right? That's one. But some of us may want to do more. Some of us may want to say, no, I want to actually come into Gift City, set up a presence. How do you do that? So, proposed scenario, there's a lot which has been spoken about Global Treasury Center. A Global Treasury Center is nothing but a finance company, but it's an in-house finance company. And all the dealings which you do, you are doing with your group company. So all the lending and all the transactions which you're doing with the group company. Of course, from a borrowing standpoint, you can borrow from your own an entity. If you are a multinational entity, you can borrow from your own entity. Or if you're not, if you are more like an Indian PSE, then you also have opportunity to borrow from offshore financial institutions. What does it do? As I said earlier, when you're borrowing from offshore financial institutions, there is that institution is not liable to tax. Otherwise, when an Indian company is making a payment to an offshore financial institution, the offshore financial institution is usually taxable in India. In this case, there is a specific exemption which has been given to the offshore financial institutions, or for that matter to any lender, if you're borrowing from any non-resident, that non-resident has been given an exemption. So therefore, his tax cost is lower, and consequently, the GTC's tax cost is also lower, right? So that's how you kind of access the Gift City framework. And in this situation, what you do is the GTC will then give a loan to the Indian entity. It will borrow from offshore financial institution and give it a loan to the Indian entity. And the tax consequence, which I explained in the previous slide, will be exactly the same here. So it's a alternate way of doing and setting up your own presence. This scenario, it talks about more if you want to carry out proper pooling of funds. You want to really not use the GTC as a funding mechanism, but really a cash pool. There are multiple group entities of yours which are overseas. Some has loan requirement, some has excess cash. Through this GTC, you can actually pool all the money into one account, and there from here you can cater to the funding requirements of the group entity. Apart from that, what all can the GTC do? The GTC can do credit arrangements. It can transact or invest in securities. It can buy and sell derivatives as a client. It can ensure liquidity management. It can manage a relationship with financial counterparties. All of that is permitted. You can act as holding company. That's also was mentioned in the previous slide. So a range of activities as well as services can be done from the GTC. And we also saw that there are already 3 GTCs which are set up. And when we are talking to clients, there's a lot of interest as far as this area is concerned. With the amount of tax changes which have also come, clearly this is one thing which you'll probably see a lot more entities wanting to come and set up, and you'll see that the whole ecosystem actually gets developed as far as GTC is concerned. The previous presenter already covered this, so without spending too much of time, what this slide really clarifies is that today if you are going and listing a bond overseas, say for example if an Indian entity is borrowing for its India needs, but it goes to say Luxembourg and list the bonds, clearly there is a withholding tax again. There is a 20% tax as per domestic law, which can be reduced by treaty depending upon who the investor is. But there is that tax leakage. What Gift City does is, of course, brings the tax rate to 9%. But it does one more additional thing. As far as this first structure is concerned, you will have to actually look at every investor, right? Either you normally apply a 20% tax rate, or you will have to look at every investor and see what is the withholding tax rate. Somebody will give you a TRC, somebody will give you some other document, and there is a huge amount of time and effort which you'll have to spend to determine what is the right rate as far as the first structure is concerned. And when we talk to clients again, they say that's a huge administrative burden and nobody wants to really take that. How does the Gift City structure improve it? As far as Gift City structure is concerned, the withholding tax is prescribed in domestic law. The 9% is under domestic law itself. Therefore, there was no requirement for you to really take all those humongous documents, go through all of that. So from an overall administrative standpoint itself, if you look at it, that brings down the overall cost of administration. Right? So that's the other thing to really look at. Don't just look at it from a taxation standpoint, but look at it from overall administrative standpoint. Re-invoicing has already been covered. So it can be re-invoicing can be done for import as well as export. You could the Indian entity can bill the GTC, and the GTC can in turn bill the overseas entity and vice versa. And when we're speaking to clients, what we realize, why would you do this? Because there are certain thresholds or there are certain time limits within which you'll have to realize payment or you'll have to make the payment to the importer. And in all scenarios, it's not always possible to meet those timelines. There may be different reasons for different people. So for example, if it's capital projects, your payments may be delayed and you may not be able to really bill it. So there may be a lot of those scenarios which one can look at, and this GTC actually comes in handy to address those situations. So that's something one should really look at closely. Ship leasing, I think this is another aspect which Astoshji covered. What we need to bear in mind is that the IFSC entity is an entity in a special economic zone. It is in the SCZ. And when you are buying the ship, right, there is no IGST which is payable. Today, if you buy a ship in the domestic zone, and if you're, for example, if you're buying it from a non-resident, there is a 5% IGST on the cost of the ship. The entire cost of the ship you pay 5%. But because this is in the SCZ, there is no 5% IGST. So there is a huge saving as far as the cost of acquisition itself is concerned. Of course, you can set off the IGST against future liabilities, future input tax or output tax, but who wants to do that, and it's such a strain on your finances. So I think one important thing is that there is no IGST which is there, and in from a operation standpoint also, these entities have a priority in terms of say ROFR compared to foreign entities. These entities have a priority in terms of right of first refusal for this government contracts or tender contracts, and that's why we see a lot of these entities wanting to come and set up presence in Gift City. As was mentioned, and there was this timeline to set up these operations, commence these operations before 31st March 2025, but all of that has now gone, and now you have a lot of time to set up to another 5 years you have, and you can commence your operations before that. So that's another welcome change as far as ship leasing is concerned. So I'm conscious of time. I think I quickly ran through these slides. I think I'll end my presentation here. If there are any questions, if there are any comments, happy to discuss them now or maybe later as well. Thank you.
Thank you so very much, sir, for sharing such valuable words with us. Well, now I would like to request from Shri Ashutosh Sharma ji to please kindly present a memento to Shri Suresh Swami ji. And I'm so sorry, sir, you have to come again once again on this stage for the memento. So I would like to request from Shri Ashutosh Sharma ji to kindly please present a memento. All right, as Shri Ashutosh Sharma ji is not here with us for now, so Ms. Riddhi Bandhari is here with us to present a memento to Shri Suresh Swami ji. I'm so sorry, sir. Yeah. Ladies and gentlemen, can we have a huge round of applause, please? Thank you so much, ma'am. Thank you so much, sir. Well, ladies and gentlemen, proceeding further, we now move on to a fascinating segment, case study sessions. Our esteemed industry experts will present their real-world experiences of leveraging GIFT IFSC for corporate finance and treasury operations. And to have this amazing case study sessions, I would like to invite the dignitaries on stage. Please join me in welcoming Shri Kavish Sial, CEO, OBL Overseas IFSC Limited. Along with Shri Kavish Sial, I would also like to welcome Shri Achint Kapoor, GM Corporate Finance. Thank you so much. Also, I would like to welcome Srimati Anupurna, Head Treasury, Risk and Insurance. Once again, can we have a huge round of applause for the lady, please? All right, proceeding further with this case study session. First, I would like to welcome Shri Kavish Sial, CEO, OVL Overseas IFSC Limited, to present his case study. Please give him a huge round of applause.
Good afternoon, everyone. I think we are the last three probably holding you from your lunch, so we will try and make it as crisp as possible. I think we had a presentation. Can we have that on? Yeah. Okay, so there is some experience sharing that I will, of course, take you through. But I thought just to set the context of who we are and what we were doing even before we went to GIFT IFSC, we thought we'll tell you something about ONGC Videsh. So, ONGC Videsh was incorporated in 1965. It was then known as Hydrocarbons India Private Limited. We were rechristened as ONGC Videsh Limited in 1989. And today we are present in 19 countries, 32 projects we hold in 15 of these countries, 4 are our business centers. And we produce about 200,000 tons of oil, barrels of oil every day. We hold significant reserves across the globe. We leverage on our strengths, which are in terms of a diversified portfolio, our excellent human resource, the technology that we leverage on, and a diversified portfolio of exploratory, production, and under development projects. In terms of our global footprint, if you see on the screen, we are present across the width of the globe. So from Latin America in the west to the Russia in the far east, we have presence in several countries. In terms of where we hold our reserves, so clearly Russia and Mozambique are the 2 countries where we have our largest reserves today. And just to give a context of how much ONGC Videsh is doing outside India, we tried and compared it with the total domestic production of oil and gas. So we are producing about 24% of the oil internationally that is produced in India. And in terms of oil and gas, we are producing about 16%. We are today the second largest E&P company in India. We are second only to our parent ONGC. Right? Now, globally, we partner with the who's who of the international oil companies and national oil companies. So you can say we have some experience of operating overseas. And it is in this context that when we went into GIFT IFSC, and that is the benchmark with which we look at the regulatory environment in GIFT IFSC. Now, coming to experience, the first thing is how do I get into GIFT IFSC? How do I set up? How much time it will take? How complex or easy will it be? And this really highlights the time that we took. So at the time when we set up, there was this concurrence of Niti Aayog which was required, which is not there today. But even with the Niti Aayog concurrence, and until the time we were given the approvals by the SEZ commissioner, it was only 45 days. Now with Niti Aayog not being there, if some PSE is wanting to set up presence, I would dare say that it would be much lesser. And also another change that has taken place since then is that in terms of the SEZ approval, while that process was a separate process at that time, now this is internalized within IFSCA. So there is an administrator within IFSCA who takes care of the SEZ approvals. And therefore, it's a very fast process. I was speaking with somebody, one of the banks which has recently received registration, and they said something like 27 days is all it took for them to receive their registration. So that is how fast things move in GIFT City, and largely due to the fact that you have IFSCA as the regulator, which is not only unified, but it is a regulator which is very willing to willing to listen to you, very open to suggestions. And if you have a proposition, you can take it to them and they will guide you on how you can actually bring it on ground and start operating from GIFT City. I think in terms of also the kind of advantages that we see, and which is why we are there in GIFT City, clearly onshoring what you do offshore has several advantages. So it is definitely a more cost-effective proposition for you to do something from India than it is to do from outside India. You have better control without worrying about the kind of risk that a place of effective management guideline brings to you if you are operating overseas. You are in the same time zone, and therefore you have more effective coordination with the Treasury Center or whatever presence you have in the GIFT IFSC. Of course, there is a lot of flexibility in terms of FEMA. I think tax is something that we all talk about, but in terms of flexibility in not having to comply with some of the guidelines that are applicable to us in mainland India, because as the previous speakers mentioned, we are essentially outside India so far as FEMA is concerned, and therefore FEMA guidelines or regulations do not apply. There are of course IFSCA guidelines which apply to us, but again, as was mentioned previously, these are essentially light touch regulations. And I think Supriyoji mentioned that so far as Global Treasury Center is concerned, they are essentially saying that you should operate within your board defined policies. So there are not too many constraints on operating seamlessly within the GIFT IFSC. Tax advantages, everyone speaks about no withholding tax when I borrow from outside, all of that, but I thought I'll put a couple more there which are also significant. So one is that you are aware there is this concept of global minimum tax which is now coming in. Many of the countries have legislated, India has not, but it is only a matter of time. And then if you, let's say, have a treasury center operating in Singapore, where that is the only thing you do, so you will be subject to a global minimum tax of 15% over there. But if you operate the same treasury center from India, because you already have a operating company or companies within India, you are looked at as India jurisdiction as a whole, you are consolidated, and therefore you do not pay any additional tax in the form of global minimum tax by being in India. So I think that's one clear advantage. Also, you do not have a situation where you have a 30% cap on your interest deductibility. So there is no cap like that, which is otherwise applicable if you are operating from India. So clearly there are significant advantages in operating from GIFT IFSC. But as with many other things, it's not as if everything is perfect. There is, of course, some more things which could be done, and we have been effectively engaging with IFSCA for leveraging on our overseas experiencing and seeing how we can position GIFT City even more attractively to overseas investors and even to Indian CPSEs wanting to go overseas. So I put some of them also over here. So clearly as an E&P company, one key ask for us is to be able to hold participating interest, which today is not there, but we are very hopeful that with the support of IFSCA, which we've been receiving, this is something that will be enabled. And when that happens, the whole gamut for an E&P industry, whether it is holding interest overseas through shareholdings or through participating interest, will be available. The second thing I wanted to talk about, it's not in IFSCA's domain, but since we are talking of what could be done better, is aligning the tax regime. So there are definitely wonderful things that are today available within GIFT IFSC in terms of a 10-year tax holiday, or there is no withholding tax on interest payments to non-residents. These are fabulous things. But what could be done further, and to pitch GIFT IFSC to be as attractive or even better than the other leading financial centers, is if you are able to align the tax regime in GIFT IFSC to that in other centers. Now, there are several parts of it, but for the sake of brevity, I would only say that some of these regimes are more preferable from an investment point of view. And again, this is an area where IFSCA has been supporting us. We do hope that the government of India will look at some of these possibilities. uh, we are all CPSE, so we are used to operating with certain requirements from the MCA or DP in terms of, having independent directors or several board committees which are there. But when we go overseas, we find that most of it is not there. And we feel that if in GIFT IFSC we can have a similar regime, which essentially GIFT IFSC has given, but due to certain tweaks that are required within the MCA regulations, etc., I think we are not able to take full advantage of that. That is another area. So if we are free to do our business without the need for having board level committees, an audit committee, or the need to have independent directors on our board, then we can operate with a very lean structure and very efficiently do our business. Just a couple of minutes more. I think one thought that came to us was that, before GIFT IFSC was born, there were a lot of Indian companies which are essentially doing overseas business, but for want of something like GIFT IFSC, they had set up their presence in mainland India. If GIFT IFSC had been there, definitely we would have set up presence in GIFT IFSC. Now, is there a way by which these companies can look to relocate to GIFT IFSC so that some of the regulatory challenges, and it is not about taking tax advantage of GIFT IFSC, it is about the regulatory challenges that one faces when you operate within mainland India and which are not there when you go to GIFT IFSC. Can those be enabled for such Indian companies? Now, if something like that is done, I think that will make the Indian companies operating overseas more competitive, more nimble-footed to be able to compete globally. And, there are a couple of things from RBI perspective, which, of course, we have taken up. So, borrowings by GIFT IFSC entity is very easy, very smooth. But when you on-lend it to India, then the Indian entity has to make certain compliances. Now, if this is being used for overseas operations, can we have a situation where this is made easier for people? And so these are the kind of things which we are working on. I think we are very encouraged with the way IFSCA looks at things. They've been supporting us wholeheartedly. And over the next few years, we will definitely see an even better environment. It's already world-class, but we will see an even better environment within GIFT IFSC. So I want to congratulate IFSCA for organizing this meet and for the great work that they have done. And on behalf of OVL Overseas FC, sir, we are, of course, there to support you in all your initiatives. Thank you, ladies and gentlemen, for your patient listening. Thank you very much.
Thank you so very much, sir, for sharing your valuable insights with us. Well, ladies and gentlemen, proceeding further, it's now time that we shall invite and welcome Shri Achint Kapoor, GM Corporate Finance, Indian Oil Corporation, to present his case study. Can we have huge round of applause for the gentleman, please?
Good afternoon, everyone. As Mr. Sayal has rightly said that we three are going to eat into your lunchtime, but please bear with us. Now, basically a brief about this company. It is a wholly owned subsidiary of Indian Oil Corporation Limited. And Indian Oil is predominantly a refiner, and later on it's having a great marketing network also. So there was a need that the financing requirement, can it be met through some other source? At the same time, lot of investments are being done by the company outside India. So when this opportunity came in 2023, we got registered, and it was on 10th August 2023, we got the certificate from IFSCA to start our operations. Now, to be very honest and candid with all of you, in the first 4 or 5 months, We were not aware that what is to be done. There are a lot of regulations are there, but to bring those regulations to the real use of the company, that was a challenge. So even we got registered in 10th August 2023, our first transaction happened on 28th March. That was a refinancing that we did for the parent company. And I'm very happy to share with all of you that today we have already entered in last 1 year more than 25 transactions of pooling of funds, of raising loans, and even giving loans to our subsidiaries. And it is basically all sort of transactions. Volume size might be 20, 30, 40, 50 million, but we have touched upon all the aspects. And the guidelines, how they can be helpful, we have actually tested that. So as I said, presently around close to 260 million of financing transactions we have carried out. And we basically plan that this number will be going to cross in next 8 to 10 months beyond $1 billion. One very important aspect for oil companies I want to share that all the companies are basically having a vision that we have to be, energy transition has to take place. And if you see the structuring of all these companies, it is basically they are not doing it themselves. They are doing it through their wholly owned subsidiaries or joint ventures. Now, when it comes to raising of loans for those joint venture or subsidiaries, it is very difficult. So at that point of time, we have seen that this GIFT City entity is a real helping hand to them. We actually tested that. When my JV companies went to the market with new technologies to the banks, they were not offering them very good rates. But me being the equity partner of that company, through this company, I could give them loan. I could earn myself and give a lot of savings of interest cost to them also. So what we have planned for, I'll just say, based on the guidelines which have been shared by my predecessor and the IFSCA team, we have already started our GRCTC operation in GIFT City. And second very important aspect was investment holding. This was really the help we got from the regulator that within a very short span of time of 15 days, we could open this particular segment. And I still remember, Riddhi ma'am is also sitting here. I must appreciate that, ma'am, for you. That fund was about to go to Singapore as per the approval of our board. But we told the board that it is better that we should route it through GIFT City entity. And we got the approval from the regulator within 15 days. So thank you so much for that. And that is what I have seen, that in case you have any transaction in mind, this is one of those regulators you can speak to them. Within the rules, they will guide you how to do it. Further, we do have the plans of carrying out the ship leasing activities from this company. That proposal is basically being looked after by the management. And at the same time, captive insurance also we wanted, and we have requested IFSCA also for that, that in case they allow this captive, it can be a big boost for oil marketing companies because their insurance outgo is very significant. Now, let me tell you that because I am seeing many of my peer company mates here. Now, when we had this difficulty of how to basically use this platform for the help of my JV and subsidiaries, what we started is that all the joint venture companies and subsidiaries, whatever is their investment needs and their financing need, we started collating that data in GIFT City IFSC. And then we realized at what rates they are borrowing and what are the investment opportunities. To meet this need, then we started that what options we have. So on the other side of the financing, the options available with us was that I was having some foreign subsidiaries which are having surplus funds for some months, some years also, because of some regulations being at that place, and they have to put that money in fixed deposits. So what they're earning there, my one arm, and what my other arm is basically seeking from the market, there's a huge arbitrage into that. So this is how we started doing pooling of funds from my subsidiaries outside India. And when we started giving the loans and financing to our joint ventures and subsidiaries, the need went up significantly. And then we started basically having various lines. Many of the banks who are sitting here, they've already given us very good lines, short-term as well as long-term. So using those lines, now we have basically started giving loans to all the companies. Now we are at that point of time that we need more and more lines. We had a meeting with all the bankers recently that we need more lines from your side so that we can use that. So if I basically summarize this entire transaction that we did is that we have this IGCML is IOC Global Capital Management IFSC Limited. So our financing requirement was met through financing from foreign banks as well as Indian banks in GIFT City. And then we have the pooling of funds carried out through my subsidiaries, which were putting the money in fixed deposits, and where we have utilized that. Our first transaction was basically ECB refinancing to the parent company itself. That was around $100 million of transaction that happened. Second transaction, again, we did a ECB financing for a joint venture company. We have a joint venture company which is into synthetic rubber, and it is partnered by TSRC. And their interest cost went down because of that, by almost by 30 basis points. Then we have extended the loan. That was a unique transaction for us. That was ECB INR. The need was in INR by a battery swapping company which was open in Bangalore, and they wanted the funds in INR. We have the funds available in USD. So we took a derivative transaction of cross-currency swap by hedging the interest rate as well as the dollar INR fluctuations, and we gave them this loan, and this entire transaction we saved close to 90 basis points for the group. So then that opened a very important thing for us, that now we can also give ECB INRs, even that is more effective for new ventures, for which the normal financing is not that cheap. And the last thing that we recently did is that there's a fertilizer company. We basically provided them the short-term buyer's credit, and that is basically a monthly line they take up from us. So with these things, we are right now close to 262 million of financing is there in our books right now. And there are almost 500 to 600 million of transactions for which we are in talks with our joint venture company, especially into the renewable energy, and which we'll be basically doing back to back when we have the banking arrangements with the banks in GIFT City. This was one very important event that I mentioned in the beginning. There's a company called Sun Mobility Singapore, because each of the OMCs basically has set up their target to achieve net zero, and battery swapping is going to be one of the very important things. So this company basically, we worked out the solution that we need to basically have stake in this company, and this entire money which went, that is around 78 million plus, 78.31 million, it was basically sent through GIFT City entity. Now GIFT City entity is actually the investment holding company for this. The moment this transaction happened successfully, now basically on the left-hand side, this is the structure of one of my companies in Singapore. So now we are planning basically to even bring back some of the companies which are outside India back to GIFT City IFSC. Because the first transaction is always the difficult one when you have seen the dividends out of that. So it is very easily available that we can do that for the existing companies also. There are few asks on which we know that regulator is already working, but we have basically been pursuing with the regulator. One is on the captive insurance. One part is definitely that the assets which are outside India, but we were also of the thought, because many times we don't get insurance coverages for many of the covers. For that, we need to have a captive in place. So for that purpose, necessary amendments in the Insurance Act or through notifications are required. And we know that our regulator is working very closely, and we'll definitely see some advantages coming to the big companies in light of captive insurance. Second is ship leasing, because on an average, we operate close to 500 voyage time charter or voyage charter agreement we carry out every year. So it is also one of the very important domains with the benefits, as shared by Mr. Suresh also in his presentation, that we can bring some of the ships, especially to begin with LNG vessels, through GIFT City. This will definitely be advantageous for companies who are basically importing gas and crude oil. There is a committee of IFSCA which is working that commodity trading can also be a part of financial service. So if something like this happens, it will be a big boom for all the companies which are basically into commodity business. Now, many of the companies sitting here, they have their commodity trading arm outside India. So if that is allowed, they can bring that business back to GIFT City. And last is the fund management entity. So if we basically typically see that all the renewable investments which are going to come for Indian Oil, and I see my peers also, that will be with the concept of 70-30. There will be 70% borrowings and 30% equity. So that borrowing or the funding which has to come, it has to come through this FME route. This can be one of the best routes we can basically have for investment which are coming in the renewable sectors, which have constant fixed returns and which will be definitely attractable to foreign institutional investors also. There are certain asks, sir, we took this opportunity that because regulator will be here, we know that you're working on this, sir, working very tirelessly with us on this matter. This dispensation, which my predecessors also said, sir, when we are basically thinking of expanding ourselves, we need to have the flexibility of opening companies at a very short time. It can be step-down subsidiary or joint ventures. So being a CPSE, sometimes we have certain regulations that we have to meet up with, certain permissions we have to take, which reduces our speed. And this is how we are not able to basically compete with the people who are basically in this business through private sector. So this one dispensations we need from DP, DPAM, and the DOPT. Second, as I discussed that regarding any amendment in Insurance Act or any notification to allow captives. Participating interest holding, which Mr. Kavesh has also said, because we have interest in some blocks outside India. As per today's regulation, we cannot basically bring those holding or participating interest through GIFT City. If that is allowed, it can also bring a lot of control back to India. And last is commodity trading that can basically bring huge volumes to GIFT City IFSC. So thank you so much to all the delegates for this opportunity. And thank you so much to ONGC team, IFSCA team for giving us the opportunity and be a part of this forum. Thank you, sir.
Thank you so very much, sir, for sharing such valuable words with us. Now, proceeding further, we have an esteemed leader from ArcelorMittal Nippon Steel India, who will share insights on risk management and treasury operation. Please join me in welcoming Srimati Annapurna, Head Treasury, Risk and Insurance. Can we have a huge round of applause for this lady, please?
Yeah, I definitely feel like an outsider in this room because this is a room full of PSEs, but I'm going to give you a private sector practitioner's experience. We represent ArcelorMittal Nippon Steel India. ArcelorMittal Nippon Steel India is a joint venture company between Arcelor and Nippon Steel, 60-40 joint venture. They are the world's largest steel manufacturing players. In India, we are the third largest flat steel producer in the country on the private sector. We are currently at around 8.5 million tons of capacity. There is an ambitious roadmap laid out by the shareholders to reach 40 million tons of capacity by over the next 1 decade. Now, just as a thumb rule, every million ton of capacity requires you to put anywhere between $600 to $700 million of capital. Now, going to reach additionally another 32 million tons of capacity will require us roughly to put between $22 to $25 billion of capital, therefore. And that's exactly where the GIFT City entity kind of steps in order to enable us to get this capital into the country. As we said earlier, given the shareholders of the entity are based outside India, we were wondering for a very good opportunity as to how we can cash pool the set of cash that is available with our joint venture holders, as well as raise externally and bring that cash to India to support this ambitious capex growth for AMNS entities in India. Now, this is just steel. Usually, along with steel, we have to ensure that all the connected assets also grow and reach the similar levels of capex expansions. So that means AMNS shipping, AMNS power, AMNS transmission lines, all of them will also have to grow along with the ports business in sync with the expansion in the steel business. So we use the advantages that was given under the ECB framework to make AMNS GTC as a group company of all of these companies in India and become an eligible ECB lender to bring in the capital into the country as well. Now, it kind of fits in very well in terms of onshoring the offshore cash. But what else that we wanted to set out to do? AMNS per se has entities in Paris, in Indonesia, in Dubai, as well as in Luxembourg and Netherlands. Now, a lot of these entities do treasury services. Essentially, when we say treasury services, it is risk management, advisory, cash flow reporting, cash flow planning, investments deployment, as well as long-term free cash flow analysis, and ensuring that the right information is available to the management to plan their entire operating capacities. Now, the intention was to onshore all of this into GIFT City rather than keeping them in different jurisdictions. So we set out to start centralizing not just the cash, but also the treasury services, which is being done in several geographies into the GIFT City. So in terms of therefore covering the overall vision, it is not just to bring in the cash, but also to onshore what otherwise we do in terms of treasury activities globally as well. Now, the predecessors also spoke about how quickly they were able to set up the operations. And I must say that we've had an extremely pleasant experience in terms of our setup of the operations. Sometime in February last year, the IFSC officials had visited the AM offices in Luxembourg, and they had a very fruitful meeting. Subsequently, we came about and seeked out a list of questions and clarifications, also some relaxations with the IFSCA, which again was very favorably considered, and I will cover some of that in the later slides. We kind of got our internal board approvals to set up the company sometime in June of last year. We applied, we set up the company incorporation, everything concluded by July, and we applied for the license in both IFSCA as well as SEC in August. SEC came about in 15 days and issued us the letter of allotment for the setup. IFSCA also came about in a span of within 1 month to give us the provisional license. We concluded the corporate governance policy requirements and went back to the IFSCA to get the final licenses as well. And along this entire process, even all the ancillary requirements like getting your lease deeds done, your GST registrations, or your REC registrations, all of that got concluded. That if you really look at it as end-to-end, from the time we set up the company, July, to the time we applied for the license, August, and when we brought in the first ECB infusion into the country, October 1st week, we finished it in a span of 3 months from the time we even approached for the license. So that is the speed in which the regulator really supported us, and we are very thankful for that. And this is a and I can see that this is getting repeated time and again, even with OVL as well as with IOCL. So this is a benchmark for other RTCs and GTCs who want to set up in the country in GTC to look out for and convince your management as well in terms of how quickly you can turn around and set up the operations. In our view, perhaps if we had done this in any other geography, we could have probably gotten delayed by another at least 6 to 9 months to get all of these procedures done. This is a quick view of how our current office is. So we are moving shortly into Savvy Pragya 2. I know that is also one thing that a lot of you must take note of. The supply is not in so much, but there is a lot of demand, and hence the sooner you move in, it is actually quite beneficial for you to agree to the lease rentals and then set up the operations as well. So I spoke about treasury services, and that's something as a global treasury center, and also given that we have a lot of MNC flavor, we attribute a lot of importance to what else can the treasury center do besides just handling the cash. Now, GTC, GIFT City is in a very good location. It is in the Asia time zones. And we believe it is a very good opportunity for a commodity player like us who's in steel industry to also start to do commodity hedging. So we have, the plan is, and typically, being an MNC, they will want to wait and see how we transform, how do we get the right talent out in GIFT City to move into front office hedging. But the plan is to start off with back office and middle office, demonstrate the capabilities that this RTC can do, and hence eventually move into the front office hedging, whether it is, whether it be crude hedging or whether it be, gas hedging or any of the other ancillaries that we have like coking coal, etc. So that is one big area of focus. Second is how do we take advantage of the finance company framework to also support in reinvoicing efforts as well. So we have, of course, represented to the IFSCA to permit title transfers along with reinvoicing. But we do believe that this is a good opportunity for a global treasury center to step in between the ultimate group company buyer as well as an international external seller and be able to kind of support in the reinvoicing and the resultant financing aspects as well. The third important point is around all your liquidity planning and the reporting, the cash bridge that we do, at any point of time. So the fund management typically in a treasury center is 15 days planning, 1 month planning, 6 months planning, 1 year planning. So all of that gets revalidated time and over. You need real-time live visibility of your cash flows across jurisdictions. Now, GIFT City being SWIFT operable is also a huge advantage for us to see live balances across jurisdictions in our AM systems so that we can report in terms of cash bridges and also plan in terms of when and how these individual group companies need to activate their borrowing lines or their investment deployment as well. So that's one very core area that we are developing skill sets on as we speak in terms of able to plan active and live cash bridge and liquidity management facilities out of GIFT City as well. I wanted to speak about especially the advocacies that we had requested IFSCA, subsequent to our initial meetings and how responsive they were and how accommodative they were in giving us the clearances. So AMNS GIFT City, when they set it up, we were keen to do treasury services, not just for the global AMNS companies, but also for the Indian AMNS entities as well, across power, shipping, ports, and steel. The regulator was, again, kind enough to permit treasury services for Indian companies, and so long as it solves for the FEMA guidelines in terms of activating their treasury services. Second, in the group company definition, which was there earlier before the latest framework is coming out, was in a way restricting the group companies to those who are consolidated within the group. And the AMNS joint venture is not consolidated either with AM or with Nippon Steel because we are a 50-50 management control entity. Again, with the representation, now the latest rules will cover common brand names, 20% holding requirements. So we are able to therefore widen our treasury services activities to both ArcelorMittal as well as Nippon Steel eventually, rather than restricting ourselves only under the AMNS joint venture set of entities. Of course, we did seek clarification for getting the INR ECBs included in the list of permissible lendings. So that again kind of got concluded. Thin capitalization guidelines, again, thankfully kind of got released after representations from us and other industry players in GIFT City. The nil withholding tax guidelines on loans also came through. So a lot of these, in some sense, enabled us to think of not just a narrow framework of operating within AMNS global entities, but also go beyond that and reach the ultimate shareholders as well. and see how we can progressively move a lot of their funds into India. So much so to say that ArcelorMittal themselves came down sometime in October with their entire heads of departments and met IFSCA to want to understand how AM also can eventually set up their GTCs in India. So that's going to be a big plus if that happens, but we are trying to make efforts in the right direction therefore. I conclude here, and hopefully if any questions are there, we can take during lunch.
Thank you so very much, ma'am, for sharing such valuable insights with us. Well, before we conclude this insightful session, we now open the floor for questions. If you have any queries for our distinguished speakers, please raise your hand and our team will pass the microphone to you. We are all open for the questions. Do we have any questions coming our way? Yes, we do have. Can you please pass the mic?
Thank you very much for these wonderful presentations and case studies. Just a quick question to the lady. So you did mention in your presentation that time was one of the important factors which led you into the gift city. Is there any other reason for you to be here since you're a global organization, so you chose to be in India?
They already have their respective offices in Luxembourg and Netherlands. But what we realized is that when it comes to treasury services as well, the pool of talent that is available can easily be warehoused in GIFT City. We have seen significant wins by various banks in India where global in-house centers have come in, and they're all based in Hyderabad, Bangalore, some in Gurgaon as well. So we believed that the talent is also available. If we want to scale it up, we can scale it up here. So that was a big advantage. Third, and most importantly, across the ArcelorMittal and Nippon Steel entities, the biggest cash requirement was in India. Because across the various, we are the ones who are substantially expanding. And hence, on an average, the requirement to even spend a couple of $1 billion every year on CapEx was a big factor for us, and we needed somebody who's quite close to us and who can actually work along with us in that time zone to be able to do the capital infusions as well.
And just quick follow-up, was cost in any way a consideration while comparing it with any of the other?
Yeah, definitely the lease rentals is a big savings here. The manpower is a big savings here. Even the setup cost is significantly less. Even after the latest increases that has come in on registration fees, we still believe that the setup cost here is lesser than what it is there internationally.
Hi, my name is Suresh Swami. I have a question for Achint Kapoor. Achint, you mentioned about how you utilize the Treasury Center to finance various entities. What has been the impact on the overall, cost of funding? How have you reduced the overall cost of funding? What strategies have you used to actually bring it down?
I missed out to say this thing during presentation. In the third quarter of operation, this company became profitable, and means in the March 2024 last quarter itself, and every quarter the profits are going up. But more than the profits of this company, all my joint venture and subsidiary companies who have taken loan from this particular entity, their interest costs have reduced from the range of 30 basis points to 60 basis points. So even if I'm basically giving them foreign funding and taking from them the cost of arbitrage, plus I'm also taking the cost of the cross-currency swaps I'm doing because of interest rate benchmarks are different, the currencies are different, even then it is cheaper. The point that I raise is basically, now I'll give you an example. Now there is a company which is into battery swapping. Its revenue model is not yet being proved. So when that company go to the bank, they charge them something around 9% in INR. But the same company I know, because I'm also equity investor in that company, I know the future of that company. If I'm basically bringing the money from Gift City entity to them, it is very much advantageous. They're able to get that money at 8.4 to 8.5%, even after including all these costs. So they are saving more, and a small portion is coming to Gift City entity also. So what we basically say, around 30 to 60 basis point saving is actually happening to the other company, and Gift City entity is also earning close to around 20 to 40 basis points. So it's basically near to, I'll say, 80 to 90 basis point saving as they grow.
Sure. Thank you. That's substantial, but thank you for that input. Thanks.
I'm Arvind Singh from Bank of India. My question is to Mrs. Annapurna. So this regarding this one, your office is basically based in Luxembourg, which is also considered a tax haven, a very easy of doing business. So how do you compare this Gift City IFSC center with Luxembourg in terms of taxation, ease of doing business?
There is, in terms of taxation, we don't see much of a difference. Of course, Gift City gives you the additional 10-year tax holiday as well. But otherwise, withholding tax guidelines are very similar. Of course, withholding tax guidelines for loans are similar, bonds are still different, and there is some room more for Gift City to catch up on that. However, the outside of these, in terms of the 10-year tax holiday definitely helps you. As he said, the profit that you book in Gift City is then going to enjoy the 10-year tax holiday for the, which is not there in Luxembourg today, because that is already an established unit for us, which has been there for several years. More importantly, I think the cost of operation is very different. The availability of talent, I cannot scale that up today as much as what I can scale up Gift City in the later years. I think that is also something that we thought through to say whether we continuously keep using the existing units or do we start something new and then use that for scaling up our growth overall. And as I said, the need for capex was in India, so it made sense to also push it somewhere closer to the Asia zones.
Okay, thank you.
Do we have any other question? We are still open for the questions. Well, I don't think we are coming across with any question. Thank you so much to all the dignitaries. Well, I request you all to please stay on stage because we would like to felicitate with the memento. I would like to request Ms. Riddhi Bhandari, General Manager IFSCA, to please kindly join us on stage to present a memento to all the respective dignitaries. Thank you so much, ladies and gentlemen. Thank you so very much. We really appreciate it. Well, once again, I thank each one of you for such an interactive session. Well, ladies and gentlemen, thank you all for your valuable participation in this session. We will now take a break for networking lunch. The lunch is arranged for you all at first floor cafeteria. Please be back by 2:30 p.m. as we resume with session 2, Finance, Company and Capital Markets Opportunities. Thank you so very much. please kindly join us in the front side. And thank you so very much for being here with us. In just a while, we'll be restarting this session. Once again, I would like to request everyone who's present here, and especially to those who are sitting at the back side, we do have a lot of vacant seats in the front side. So if you all can just join us. Thank you so much. We'll be restarting the session in just a while. Ladies and gentlemen, we'll be restarting the session in just a while. It's a very humble request from each one of you, especially to those who are sitting at the back side. I would request you all to please kindly join us in the front side. We have a lot of vacant seats in the front side as well, so we would request you all to please kindly join us. Thank you so much. Ladies and gentlemen, I would request from each one of you to please kindly be seated as we are restarting with our session. Thank you so much. Ladies and gentlemen, welcome back. We hope you had a delightful networking lunch. As we resume, we move on to our second session of the day, Finance Company and Capital Markets Opportunities. This session will focus on financial innovations, treasury management, and trade finance opportunities at GIFT IFSC. To begin this session, we have an esteemed dignitary who plays a key role in shaping financial and economic policies. It is my honor to invite Srimati Surbhi Jain, Joint Secretary, Department of Economic Affairs, to share her insights with us. Ma'am, may I please request you to please join us on stage. Also, ladies and gentlemen, can we have a massive round of applause for the lady, please?
Namaskar. A very good afternoon to all of you present here. I think my colleague from Ministry of Corporate Affairs will just join us. It is a privilege to address you all at this CPSE 2.0 summit, a testimony to our collective commitment to establish GIFT IFSC as a technology-driven, new age global financial center. I believe this summit very aptly brings the two crucial wings of the Indian economy together to work in synergy. GIFT IFSC, with its enormous and expanding potential and diverse opportunities, and CPSCs who have already established their commercial mettle and can ride on these to expand their global presence. Setting the context for this session, I am happy to share that GIFT IFSC has been witnessing brisk growth in recent times. The earlier session before this would have given you an insight, especially with existing case studies. As the Economic Survey to 2024-25 has also noted, the international and domestic financial services industry is gravitating to this unique jurisdiction, which benefits from unrestricted currency convertibility. So, Government of India has that think that global capital will act as an important driver of Viksit Bharat at 2047, and a strong financial sector would be a key constituent in India's growth story. GIFT IFSC is expected to play a pivotal role in this journey by tapping into these global capital flows to meet India's development needs. Working towards realizing this potential, GIFT IFSC has continued its ascent as a leading IFSC, improving its rank by 5 places this year in the Global Financial Centers Index, rising to the 52nd position. It has also achieved a notable jump in the FinTech rankings, climbing 4 places to rank 45. India has already emerged, you must be aware, India has already emerged as the third largest FinTech market globally with its digital public infrastructure, including UPI, Aadhaar, and the account aggregator framework, serving as a backbone for this financial innovation. The expansion of fintechs at GIFT IFSC is expected to further accelerate this growth of digital banking, alternative lending models, and wealth tech solutions, catering to both domestic and international markets. The recently announced Union Budget 2025-26 has announced a host of measures for GIFT IFSC, including extended sunset clauses, benefits for ship leasing units, insurance offices, and treasury centers of global companies in IFSC as part of Government of India's efforts to support the financial ecosystem here and attract global investors. Moving on to the second crucial wing which we have today, the role of our family silver CPSEs to the India's economy. As of March 31, 2024, there were 272 operational CPSEs, showcasing their extensive footprint across multiple sectors, from producing salt, tea, watches, cement, and paper used in every household, as well as construction of bridges, buildings, transformers, boilers, machines, and even those machines which make machines. The net worth of CPSEs has surged by 82% in last 10 years. CPSE's contribution to the national exchequer through excise duties, taxes, and dividends has more than doubled. Forex earnings of operating CPSEs through export of goods and services stood at a total of around rupees 7 lakh crores during the past 5 years. CPSEs, as you already know, play a crucial role in India's integration into the global economy, facilitating trade, overseas investments, and strategic collaborations. Many companies are expanding their international presence while continuing to adopt global best practices in governance and technology. These efforts reinforce India's position in the global marketplace, making supplies more accessible, affordable, and sustainable. As the nation progresses towards its 2047 vision of becoming a developed economy, PSUs will be at the forefront of this transformation, given their role in the $1.3 trillion Gati Shakti National Master Plan. For all this to be achieved, PSCs need access to efficient capital, access to global capital and investors, and to develop agile and efficient operating structures. And I believe GIFT IFSC can really facilitate this effectively and efficiently. A recent example has been raising USD 245 million from IBRD and USD 100 million from external commercial borrowings for the Eastern Dedicated Freight Corridor. This marks DFCCIL's initiation into commercial financing from GIFT IFSC. I'm sure we'll hear of more such cases in coming times. With the rise of GIFT IFSC, India-centric financial transactions are now being increasingly onshored, with the presence of leading CPSCs here like Exim, OVL, IOCL, SCI, IRIDA, and PFC. I think three presented case studies in the earlier session today. So at the cost of repetition, to fully leverage GIFT IFSCs, CPSCs can explore multiple avenues. They can tap international financial markets effortlessly, enlisting their bonds, issuing debt instruments, and securing green finance, setting up treasury centers in GIFT IFSC, which has been facilitated by the budget also, will allow CPSCs to centralize treasury operations and effectively manage liquidity, optimize fund allocation, hedge risks, and streamline cross-border transactions. The insurance and reinsurance solutions available at GIFT IFSC can reduce costs and enhance financial resilience for PSUs. Over 29 banks in GIFT IFSC provide tax-efficient banking solutions, including ECBs and trade finance. Aircraft and ship leasing CPSCs, again budget has facilitating ship leasing companies in GIFT IFSC, and their user CPSCs can access structured financial solutions tailored to fleet expansion and operational sustainability. The regulatory framework obviously at GIFT IFSC would also need to be dynamic and enable to address any constraints faced, keeping in view the safeguards and rigor required, which IFSCA as the unified regulator has been, I believe, actively working on. So to conclude, GIFT IFSC represents a transformative opportunity for India to emerge as a leading global financial hub. The active participation of PSUs is crucial in realizing this vision, and in turn, which can spur their own growth and competitiveness. So I urge all stakeholders here today to recognize and utilize the vast potential that lies ahead. Thank you.
Well, I request Shri Dr. Dipesh Shah to kindly present a memento to Srimati Surbhi Jainji. so much, sir. Thank you so much, ma'am. Ladies and gentlemen, proceeding further, the Global Treasury Center model offers new age solutions for managing international capital. To delve deeper into this, I invite Shri Anand Agarwal, Head Cash Product, Standard Chartered Bank. Can we have huge round of applause for the gentleman, please?
Thank you. Thank you for inviting us for this August forum, and we're happy to take you through some of the treasury trends that we see globally, and also what can help us in looking at, from a GIFT IFSC perspective, how we can achieve one of the best solutions, which perhaps some of the users which are there from a global treasury, how we see. We can delve a little more deeper into how we've seen trends happening, how a treasury function is supposed to be set up, and what are the users which we can use that for. Sorry, there's some. Yeah. No, you can click on this screen for your access. Yeah. Okay. Thank you. No problem. Okay. So, why MNCs? So when we talk about MNCs, we talk about multinational corporates, which means you have a presence globally, right? And not restricted to just one geography. Because when you set up a treasury center, you would typically look at multi-geography as a center, right? What we've seen recently, challenges and some of the factors which we are all aware: high interest regime, right? Taxation. You have to free up cash across geographies which are limited from a growth perspective, right? You would also want to raise for future dividends and capital support or capex requirements. Plus, technology becomes a very important facet when you're looking at any visibility across geographies. That becomes very important. With the M&As happening, you have multiple ERPs, multiple technologies to deal with. But from an overall perspective, what a treasury center is looking at is, how do you get an oversight of your complete books, which is spread across various geographies, and get a real-time visibility, and then decide upon the next course of action as to how would you deal with that visibility that you get across the globe, right? Besides, there are challenges which we see from a global perspective, especially with regime changes, with some of the taxation changes which can potentially have an impact. So you would want some of those trends to get captured. And a treasury center typically helps in dealing with some major of these factors as well. That's the expertise that you develop out of the treasury center. Now, what to focus for MNCs, right? Why do you focus and what do you look at it? So there's a vast concept of something called an in-house bank. That's an evolved treasury center which happens where you look at the complete books of accounts across your various subsidiaries, across all the entities that you bank with, including your JVs, etc., where you want to get visibility, and then you would essentially take over all the financing and other activities. That's where an in-house bank comes and steps in over the role. This has evolved over a period of time where it started off with maybe just a particular function like looking at FX or looking at invoicing or some other factors, and finally you evolve into a stage where you move into an in-house bank. Yeah. Next, very important criteria is also having an infrastructure to give you a real-time information and get that information to be able to use it for actionable purposes. And that becomes very important when you invest into a treasury center application, and that depends upon the host of ERPs that you have. That becomes one of the rudimentary factors when you're looking at choosing or becoming a treasury center.
information real time. That's the need, right? I mean, in India, we are at 24/7. Most of the geographies are still looking at 24/7 from a payments perspective. But that information, when you are spread across various time zones, various jurisdictions, you would still want that information to come across to you, so that that information is what is key for you to look at various financing options, or to even know what is the liquidity position with a particular subsidiary. Automation, yeah, that's one of the keys, because you wouldn't want to do something manually, and some of the Treasury Center applications help you in doing most of the automation that you would want, and most of the functions effectively, be it a short-term lending or a long-term lending, will reside upon the factors or the data that you get from the various subsidiaries, which will mean ERP integration as well as banking integration. Digital payments obviously becomes key, because that is where you finally want to remove any manual. Automation becomes one of the keys, but with that you will have to also do digital payments and also build for future. So while choosing a Treasury Center application, it becomes important that you also build for the future. So you have to foolproof that, and that's not an easy ask. So most of the expectations which are there are typically met by some of the solutions that we talk about. And how do we move, and what is the right treasury framework? Maybe there are various functions depending upon your need. It moves on to how you would evolve and make a right framework for the Treasury Center. Now, typically, what you would want as an information is all captured here, right? So from your operating companies, you would want all this information to come to you as a Treasury Center to become a source for funding them, or to get from surplus entities to get funds out of them. And that effectively will mean that what do you want to achieve? You want to achieve a zero idle cash scenario. That's the best scenario that any treasurer or finance function would want to look at. Liquidity without boundary, real-time treasury, these are just key factors, right? But the most important point is that how do you get the complete visibility across what you do for all your subsidiaries? Because finally, all this will evolve over a period of time. You will not achieve the right model right in the beginning, right? So as Achint was telling earlier, right, they started off on a smaller scale to see a POC kind of a thing, where did they see success over some of the transactions that they did, and now they're scaling it up, right? So Indian Oil is a classic example for that. And that's where most of the Treasury Centers evolve, because you would want to see benefit finally coming out of the Treasury Center. So these are just the roles and KPIs. What you look at, typically 3 facets from a Treasury side. You look at cash and liquidity management, which would mean getting visibility across all the data points that you would want, and the principal factors being increase the yield, reduce the cost. From a treasury function perspective, the facets that you look at is, one, you define the entire policy, which is what IFSCA wants you to clearly define first, right? Your policy should be in place for them to give you an approval to set up a treasury center. So all your risk factors, all of that have to be documented very clearly when you're setting this up. The roles which are there finally comes on to how do you manage the risk, be it exposures, FX, all of that comes here. When you do hedging, you do all those solutions, comes as part of that. And finally is financing. Because once you get visibility, once you get the required data, you would know where to fund or where to get the funds from, right? Whether you're raising it internally or externally, depending upon how you have got that information and how you want to use that information, this becomes paramount for you. And then how do you achieve all of this in-house is you get the right infrastructure in place, which is investing into the right technology for getting the Treasury Center infrastructure. Now, first port of call, right? I mean, in terms of when you look at how do you set up or what do you want to do. So there are various structures which you can do in-house, which means that you would want a liquidity provider which you identify, get the funds in, and fund to somebody who owns the liquidity. So which means that what you do effectively is you reduce the cost, and you use internal resources for doing that funding by raising from the various group companies instead of going outside and seeking that funding. Even if you require an overall funding, it's better to take it at a group level instead of going to individual subsidiaries, because that's how you reduce the cost. So you can do this either an offshore, you can do similar structures onshore if you want by setting up non-resident entities or accounts, which will mean that you have a better control. You have something called an overlay account structure, where you would still operate out of GIFT, but you would have all the information locally available so that any time factor which is there between various geographies or a constraint which is there, you can meet locally as well. So how do you solve that? I mean, now that the cash is an IFSC, what do you want out of that? So you can set up the Treasury Center as a header, and basis that you can do intercompany loans, which is using your internal funding. You reduce the cost which you pay out to the bank finally. Whatever is left has to be funded from the pool header, which is the Treasury Center. You can even do that without moving into a structure with notional kind of a structure, which would mean that you don't actually physically move the funds, but you use a bank effectively for doing some of the solutions that you want. Now, after that comes in re-invoicing, because once you have done all of this, re-invoicing becomes one of the parameters. There are definitions given by various countries or NASDAQ Act. They've all defined what reinsurance is about. Net-net, you're using either for purchase and sale of goods without holding the inventory, as what IFSC has clearly defined. So that's what you look at from that perspective. But largely, the definitions will mean that you're purchasing and selling goods without holding the inventory. Now, one of the typical functions that we've also seen evolving, which is typically there from an in-house bank perspective, is payment on behalf of and receipt on behalf of, which means the treasury function acts only for receiving money and sending money out, which means for all your subsidiaries, you are invoicing and you are receiving the money as well, right? In this, you will have to ensure that the receipt information comes to you because you know against which invoice, who's supposed to make a payment. The benefit that you get out of this netting, which means that you can net off the funds between the various subsidiaries which are there and accordingly reduce the FX cost, etc. And also you can look at how you want to manage the liquidity, which means if somebody is saying a 60-day invoice cycle, would you want to turn it into 90 days? Or would you want to make it even larger as long as the regulatory regime allows you, and whether that particular subsidiary has enough liquidity for that, right? So those structures can be in-house designed and made so that you try and optimize the liquidity to the extent you can. Now, how to take it forward? So one is obviously you choose what is the purpose for which you're setting it up. Various purposes, you have to outline that, whether you're looking at liquidity, payment, all of that you have to choose. What is the benefit? What is the KPI? What are you trying to achieve out of that? What are the challenges, right? Because with each activity that you're doing, right, there will be challenges associated with that. So how do you forego those challenges? How do you document it? How you make sure that those challenges are overcome? And then finally looking at the solution, which will mean that that is how you would evolve, right? Start off with a small version of it and then gradually evolve as and more learning you get out of that experience. Now, what do you look at considerations? So one is cash pooling, payment invoicing, but largely if you look at it, it's intragroup financing, which you want to concentrate upon. Payments receipts, which is on behalf of whatever you can do to that extent. You look at your capital efficiency, reducing any costs, including the cost of funds that are there, and invest in the right technology and comply to the regulations which are required to make sure that whatever you're doing, finally, you have the requisite risk factors marked, as well as those reports, etc., can demonstrate that the early warning signs, if at all you have invested into something wrong or you're going the wrong way. So some of those things will have to be factored in when you're making those choices. Now, when you define a solution, right, which will mean that you choose the right bank as well, which becomes one of the critical factors because you'll want most of the banking information to come to you real-time, online, digital, what products they're offering, right? And liquidity management becomes one of the key factors over there. So which would mean whether you're looking at a physical pooling within GIFT, or you're looking at notional, or you're looking at structures by which you can still reduce the cost by using a bank infrastructure as well. That's it from my side. Any questions, happy to take it after the session.
Thank you so much, sir, for sharing your valuable words. Thank you so much, everyone. Well, I would like to invite Shri Supriyo Bhattacharya ji to present a memento to Shri Anand Agarwal. Can we have a huge round of applause, please? Thank you so much, everyone. Thank you so much, sir. Thank you, sir. Proceeding further, trade finance opportunities for exempt trade on IFSC ITFS platform. Trade finance plays a vital role in facilitating cross-border transactions, shedding light on the emerging opportunities in this space. Let us welcome Shri Unmesh Patiwala, CEO, RXL Global IFSC Limited, to the stage. Please give him a big round of applause.
Good afternoon, everyone. Thank you, IFSCA, for inviting us to this summit session, and we'll try and explore, trade finance opportunities in this session with regards to export and imports from GIFT IFSCA. So I'll be jointly making this presentation along with my colleague, Indrajit. So we'll start with what are the typical problems which are faced by Indian exporters, and then move on to the solution, and then how that solution was conceived at through ITFS at IFSCA. So three biggest risks that the Indian exporters face today: credit risk or payment default risk. After the shipment has been made, the buyer may delay his payment, or he may declare his bankruptcy, right? So this is a typical risk that an exporter would face. The second is the currency fluctuation risk. There could be adverse movement, in the currency, and obviously the exporter bears the risk of the currency fluctuation. The third is the country risk. Typically, there are central banks in countries which put restriction on the movement of currencies, and the exporter may not get, his proceeds on the due date. So what is the solution? Well, the most easy solution is to liquidate your receivables on day one after the exports have been made. In a nutshell, this is what factoring is, right? So factoring converts your receivables on day one into cash, and then it addresses these problems, right? So the benefits of factoring, well, obviously improved cash flow. It gives you credit protection, and more importantly, it is not a debt. So it does not sit in a balance sheet as a borrowing. It is more of a balance sheet management advantage that an exporter gets. We look at the current state of volumes of cross-border factoring. Globally, cross-border factoring in FY23 was around 720 billion, out of which the share of India, or India's volume in cross-border factoring, was a minuscule 1.1 billion, which is around 0.15%, right? So which is very low. The good news, but however, is that the volume have been increasing in double digit over the last few years. Now, more interestingly, if you break up this volume, Europe accounted for more than 66% of the global factoring volume, out of which Germany alone was at 112 billion. If you look at the major exporting countries in the world, China did 144 billion, and compare that with India's 1.4. Even smaller countries like Vietnam, Taiwan, Chile, Mexico, all of them individually clocked higher volumes than India. So this shows that factoring as a support for Indian exporters, a lot of work needs to be done, and that's one way to go forward for Indian exporters. And if you look at the MSME segment, the problem becomes much more graver, because although MSME accounts for more than 45% of India's export, they do not have a proper solution. They also face the problem of inadequate bank finance. Pricing is an issue for them, and also trade documentation, as we all know, it's a highly document-intensive product. So there was a need to have a digital platform where on a single platform there would have been Indian exporters and financiers who come together in a digital method so that documentation issues are also addressed and this solution could be worked out. So this is where I think IFSCA conceived this as a possible solution, and they came out with a framework in July 2021. And today there are 4 approvals that IFSCA has given, and they have started commercial operations, commercial business in 2023. So what is this platform? This platform is called ITFS, International Trade Financing Service Platform, and it is a digital platform for facilitating trade finance for exporters and importers by providing access to multiple financiers. See, the objective is to provide not just liquidity, but cheaper liquidity. So that is where price discovery happens to the platform. The purpose is also to make GIFT IFSC a preferred location for international trade financing. And over the last 1.5 years, we have onboarded more than 20 international factoring companies on our platform, and more than 100 Indian exporters have already been onboarded who are availing export financing through ITFS platforms. The list of products that are available on the platform under both the categories, export and import. We have export factoring, which is normal factoring with recourse, which means that the payment risk is not just borne by the buyer, but eventually the exporter also has to be dependent for the payments. Limited recourse or without recourse factoring, there are 3 variants. You have a correspondent factor, which is a 2-way factoring model through FCI, where there is an import bank and there is an export bank, and the import bank takes the underlying risk. Credit insurance, typically where there is an insurance company who takes the underlying risk of the importer. And then we have the bank internal line product, where the importer banks would have surplus limits on the importer, and then they would cover the underlying risk. Import factor typically is also called reverse factoring, where you have the importer in India, and the bank in India or the financier would take the counterparty risk on the Indian importer. Then there are other products which are normal, banking kind of products, which we have pre-shipment finance and supply chain solutions. So RxIL, we are one of the ITFS platforms. We are a joint venture between SIDBI, NSE, State Bank of India, ICICI Group, and Yes Bank. And we have 3 main businesses. RxIL, we run a threads platform in domestic India, which is RBI regulated platform. We are one of the largest. We do around 7,000 to 8,000 crore volume in a month. And we have most of the PSUs on our platform, including the oil marketing companies as well, where we have integrated their platforms to our platform for their vendor financing and vendor onboarding solutions. RxIL Global is the ITFS platform, which is based in GIFT City, and where we do the export and import financing. And then we also have a fintech entity, which is basically a platform to cover other diverse supply chain solutions. This has been our journey in IFSC. In the interest of time, I think basically the message here is that we started in 2021, and in a very short span of time, we went through the sandbox successfully, and we have launched our operations. I'll request my colleague Indrajit to take you through some of the structures which are available.
Good afternoon, everyone. I'll talk about the value additions that the ITFS platform provides and some of the key transaction structures we have done. So this slide talks about the value additions that we provide as a platform to deliver different trade financing products to our corporates, SMEs, as well as PSUs who are our customers. The value additions include import factor, wherein we are doing trade financing in a 2-factor model, where import factor could be a bank in the geography of the buyer offering a credit risk to the export factor, which is the financing entity, and similar to a credit insurance, where we can offer without recourse export factoring backed by trade credit insurance offered by a insurer. We also provide KYC AML sanction checks for all our transactions inbuilt in the platform. We provide entity information through Credit Information Bureau, which is again embedded on our platform. PO verification. We are working on certain solutions regarding electronic bill of lading, blockchain-based solution for deduplication checks. We provide ready-made sales ledger analysis and other analytics to our financiers so that they can take a quick decisioning on our platform when they are financing different types of instruments. Financiers can also get live vessel tracking, which is an embedded feature on our platform, so that they can get an entire understanding of the shipment and then do the financing. We also provide collection services, which is under progress, so that we can work on different financing structures on the trade financing solution. This is the first type of transactions that we have done on the platform, where it is a typical export factoring requirement, an Indian corporate exporting to an overseas buyer, and based on open account terms, typically 90 to 120 days. And we have received the requirement. We onboarded the corporate on our platform as an exporter. We already have financing partners from different geographies where we have onboarded them as financiers on our platform. So the moment the shipment was done, the limits were set and on our platform, and then the export documentation was done on our platform, and based on that the financier went ahead and approved the transaction, financed it, and this transaction was credit protected by an insurer based in Europe. So this was one of the use cases that we have executed. The second type of transaction is imports into India, wherein importer in India is importing goods and services from overseas suppliers in foreign currency, and the supplier wants a early payment, whereas the importer in India wanted a credit period so that they can get more time to make a payment. And therein the requirement came to us. We onboarded the overseas supplier on our platform, and we did the due diligence with our financing partner, and then we offered a export factoring facility to the overseas supplier, and so that they can receive immediate payment against their supplies. And this could also be replicated for the PSUs and oil marketing companies, where there are service payments for overseas oil field operations and other things. And again, this was protected by credit insurance. This is a third type of structure where we are seeing a lot of mid corporates and corporates are launching their subsidiaries in overseas market in order to foray into different markets, and their entire supply chain is tied up to the working capital limits in India. So, and this requirement is, we also have faced this requirement, and we have onboarded the subsidiary as a exporter on our platform, and then using our financing partner, we have given them limits on the export side, receivable side, as well as the payable side, which will help them to save some cost as well as to bring in more efficiency on the supply chain. So these are a couple of transactions that we have seen in the current journey of our ITFS platform, and there are more transactions which are evolving and emerging to us, and I think we encourage all the participants to take advantage of the ITFS platform to kind of bring in more efficiency in the supply chain. So that I'll stop here, and happy to connect with everyone during the networking ID.
Well, I would like to request Sri Ashutosh Sharma to present a memento to the dignitaries, please. And also, I would like to request from everyone to give them a huge round of applause. Ladies and gentlemen, proceeding further. Next, we have our distinguished leader responsible for key regulation on corporate governance. Please join me in welcoming Shri Balamurgan D, Joint Secretary, Ministry of Corporate Affairs, to share his perspective. A big round of applause for the gentleman, please.
Good afternoon, everyone. Let me congratulate IFSC for organizing this Summit 2.0. It's the second one, and I am sure we'll have many more to come in coming years. Without wasting time, straight away, I'll take few minutes to mention what MCA is doing about IFSCA. In you all know that Ministry of Corporate Affairs is the implementing ministry as far as company law is concerned, and the policy formulation and then implementation of the act is with MCA. Starting from 2017, various amendments in Companies Act are being done to enable IFSCA to attract more investment and to make companies who are working in IFSC area to have lesser compliance burden and make it easy for to operate. So government is committed, I would say more than committed, to ensure that the companies who are getting incorporated in IFSCA are not facing any problem, starting from the stage of incorporation and then in the entire life cycle of a company who are operating in IFSCA. So that is the mandate as far as MCA is concerned, and we are closely working with the Department of Economic Affairs as far as bringing any change, any amendment in the Act and also rules as far as IFSCA is concerned. And particularly, I would like to mention about few changes which we brought out already, and then some of the changes which are under consideration. I would like to mention few of them. As I mentioned, starting from 2017, there are so many amendments which were brought in. Particularly, we have Section 462 under Companies Act, which enables government to provide exemptions, modifications in the provisions of the Act. So through using that, there are so many exemptions, modifications, adaptations provided to IFSC companies in 2017. And then particularly I would like to mention about one more amendment which was done in Companies Act is a separate section was inserted, Section 393A, which deals with Chapter 22, which Chapter 22 is basically provisions related to foreign companies. So, enabling section was inserted in Companies Act so that as and when, it's not like only one time, because we had enabling provision in the Company Act itself. Government as and when required can provide exemptions for foreign companies from normal regulations, normal compliance burden. So that is also using that provisions. We have invoked that 393A many times to provide exemptions to IFSCA companies. And one of the important amendment which important development is during 2019, what happened actually, amendments was brought in by Department of Economic Affairs, wherein IFSCA was made as a regulator in place of SEBI on many provisions, because SEBI is a very important regulator, so that amendment was also made. So subsequently, I am not listing out all those things, but coming back to the things which are under consideration, which are very important, I think particularly, I need to mention about it, that is going to be very important, which are under consideration is, there's a working committee which was constituted on a working group on financial reporting and capital structure of IFSC companies in freely convertible foreign currency, which has recommended many, they recommended a lot of amendments and then requirements. So one of the important requirement provision is, there are various filings. So under Companies Act, you have, right now you have to file all your filings, returns, particularly financial statements in Indian rupee. So that is one of the major requirement which is also under consideration to facilitate issue of capital, completing other transactions in IFSC companies in US dollars. That is also, and also allow filing of various returns. This is also under consideration. We are in discussion with Department of Economic Affairs, and also not only, I'm just mentioned a very important aspects of the consideration. Apart from that, there are other recommendation also. We are in active consultation with Department of Economic Affairs and also with IFSC, and in fact we are also in constant collaboration and consultation with the SEBI to bring in whatever changes, whatever amendments which are required. So I am sure with this support from government, with collaborative effort from all the ministries, in days to come IFSC will be attracting many more companies and it will become a global financial center. So far, around 498 incorporations happened in IFSCA. 96 of them in the form of LLP, and around 402 companies got incorporated in IFSC area. The growth has happened organically over the years. Around 498 is the total incorporation. Maybe the number would vary because it happens every day, because today also you might have had 1 or 2 companies getting incorporated. But what I am trying to say is that the numbers tell the story. So far, government is committed, and then lot of required changes, support, facilitation is being carried out, is continuously done. It has seen its organical growth, and I am sure the next decade is going to be extremely important, crucial to achieve the objectives and then mandate which was envisaged when IFSC was created, to act as a gateway, to provide opportunities for Indian companies to attract foreign investments, foreign equity. So that I am sure with support from all of you, we can easily achieve those goals, and we are in a very sweet spot as far as the economy is concerned. 5th largest economy, raring to become 3rd largest, and you all know about these numbers, no need to mention. And we have started this IFSC in a right time, taken time to mature, in the sense to make whatever changes which are required, continuously making effort to improve further, so that this center is going to become a very, very important part of India's journey towards Viksit Bharat by 2047. When we are aiming for 3.2 or 3 plus trillion economy to 32 trillion economy, we can't go there without support from institutions like IFSCA. We need to have robust institutions like IFSCA to achieve that. And I am sure the number will become manifold. 490, I say, you can consider the 500. 500 will become 5,000 in no time, because the growth happens like this only. Once you reach a tipping point, from there it is very easy to move on, and then the numbers will, become double, triple in a quick time. So that's where we stand right now. And I came here not to talk much, but only to, to tell you that Ministry of Corporate Affairs is committed to ensure that whatever facilitation which is required in IFSC area to have smooth functioning, and also to ensure those companies don't face any problem. We are committed to that, and I'm again congratulating all the participants, and then particularly IFSC for organizing this workshop, and I wish them all the best. Thank you so much for this opportunity.
Thank you so much, sir, for sharing your valuable words. Well, I would like to invite Shri Ashutosh Sharma once again on stage to present a memento to the dignitary, please. And also, I would like to request from each one of you to give them a huge round of applause. Thank you so much, gentlemen. Ladies and gentlemen, we now move into a dynamic panel discussion that will highlight the financial products and services available at GIFT IFSC for PSEs. Moderating this session, we have an expert in financial markets, Ms. Riddhi Bhandari, General Manager IFSCA. Joining her on stage, we have a distinguished panel of industry leaders. Srimati Hetal Kotak, Head Listings, NSE IX. Shri Vikas Jagga, IBU Head, State Bank of India. Shri Manish Mishra, IBU Head, ICICI Bank. Along with Shri Sachin Shah, Head Strategy, Standard Chartered Bank. Also, Shri Parag Saxena, VP International Business, ICICI Lombard. Well, I would like to invite all the dignitaries along with the moderator on stage, and we are getting the setup ready so that we can have an interesting discussion panel right here. Panelists, may I now request you to please take your seats. Well, once again, I welcome all the dignitaries along with our moderator, Ms. Riddhi Bhandari. Well, we all look forward for a very interactive panel discussion. Looking forward for it. Thank you so much, everyone.
everybody. Yeah, good afternoon, everybody. And thank you, all the panelists, for joining us today. I'll not take much time in introducing all here. I think they'll do the justification by introducing themselves when they actually take the question first. We have heard a lot about all the products, services, what a treasury center can do, what are the opportunities at the IFSC. I am sure the panelists here are expert enough and would not feel anyone bored here because they'll give a new perspective in terms of how these products and services in IFSC can be put to use in the normal day-to-day business operations when the corporates or other entities are actually operating in here. So without much ado, I'll just shoot the first question to Mr. Sachin Cha. Sachin, you've been a banker for a long time now, and I'm sure you have the expertise of having seen business in India and overseas. So how do you rate that the product offering in IFSC as far as banks are concerned has evolved over a period of time?
So first of all, thank you for having us over here. So, I'll go back when we started the operations back in 2020 in IFSCA, right? And we started with our basic products, which is about trade and lending. And this was true for across the street, right? Most of the banks started with trade and lending. Since then, when I really look at where we have come, I think we have sort of rolled out bulk of the products. And in terms of whatever the needs of the corporates and institutions are in terms of, say, hedging, trade, lending, starting from both the vanilla as well as the complex requirements, be it on the FX side, be it on the interest rate side, right? So all of those products are now available. So we started with 2, and if I were to sort of, when I was looking with my team, which is close to about more than 25 products already there, right? And I would really like to compliment here the role that the IFSC has played in terms of adopting principle-based regulation, right? That has really allowed us to replicate all of our global products and services very, very quickly in IFSCA. More importantly, also apart from product, is to really look at the scale and breadth, right? Today we have an ability to sort of service the MSMEs, right? Some of the MSMEs earlier did not have an access to foreign currency financing. Today, those financing is available from IFSCA. Second is, of course, for all the large corporates and other corporates, in terms of their trade capital or any of the complex financing needs that we spoke about. Third is also for the foreign investors, right? If they want to access Indian markets, clearly there are products and ways available where they can sort of, through the FPIs, access the Indian markets. So both in terms of the scale and breadth, I think we have seen a huge amount of evolution that has at IFSCA. I would just like to say that this is really a phase 1, and we have seen a lot of speakers actually talking about the kind of growth that has happened. We've already seen that the banking sector assets has already grown to about close to $80 billion now. But this is really a phase 1 that the focus is really in terms of onshoring what is really happening overseas with respect to India activities, right? The phase 2 where we are able to truly operate as a global international financial services center is going to be very, very, I would really look forward to that, because that's when you will see more and more products getting rolled out, right? So transition from phase 1 to phase 2 is going to be a really exciting journey. For example, today we haven't seen a very, very big leap as far as the wealth management proposition is concerned, right? As and when you see a lot of sophisticated institutions coming and sort of setting up their shop over here, you will see the commensurate sort of products being rolled out. So in summary, the journey has just started, and I do expect more and more products sort of being rolled out. But suffice to say that in terms of meeting the needs of the corporate India or an institutional client over here, we have all the product breadth which is available across the banking institution over there.
Thank you for that insight, Sachin. In fact, the presentation which was made sometime back by Anand on the cash pooling product which is generally not seen being offered by Indian banks, or because cash pooling is something which is not permitted in India. So that was a very innovative product that we saw. And yes, phase two, I would rather also like to add one thing, that it should be more of bringing offshore entities onshore, not only the Indian entities who have gone offshore to bring them onshore. That will be the real challenge for the institutions here. Speaking about the challenges, I'll first like to introduce on the landscape that GIFT IFSC has in terms of the fundraising from Indian issuers, and what are the changing trends that you have observed. Hetal, if you could throw some light on that.
Sure. Firstly, thank you for having us here. And just to share some trivia, it's a very nostalgic thing to be here speaking to CPSEs almost 6-7 years down the line since we started marketing and since we started speaking of Gift City. I'm talking about 2017. We kind of claim to be a little older than IFSCA also in Gift City. When we used to come and speak to CPSEs, the question was, really, Gandhinagar, Gift City? I mean, that kind of apprehension was there. And Dipeshji, if he was here, he would have, synced with the same thing. So we've really, when we talk about phase two and phase, I mean, it's absolutely right. We've really come a long way. As far as evolution in terms of what we have seen at exchanges, this itself, as I said, is a big achievement. The change of perception, the change of the thought process in terms of the activities that can be onshored, the fact that they have been onshored, they have been, tried and tested now, and now we are at the phase two. Where we started, there were scenarios, there were cases when a lot of CPSEs present here also reposed so much trust that yes, this is a jurisdiction, growing jurisdiction of tomorrow. And there were so many instruments, ECB instruments, that they listed with us. But at that time also, that little inkling of doubt was there, and therefore it was all duly listed. There was still an element of London, still an element of Luxembourg and Singapore present. Today, I would proudly say, if any of us here analyze the past 9 months of ECB data, whatever ECB bonds have been issued by Indian entities, 0 have been listed in foreign jurisdictions. All of them have got listed on Gift City here. So that itself is one big achievement. Talking about phase two from my perspective, as an exchange, we would like to share that, end-to-end issuance of these instruments now has been enabled in Gift City. We have a depository who is issuing you a global ISIN. We have a depository here who has custodians who, all the funds, all the foreign FPIs can hold those bonds here. We, end-to-end, we have trusteeship services, we have legal counsels, we have all the possible ancillary services in GIFT. So to us, we see that as the biggest phase two that we really aspire, and we want to put forth here to all the participants that CPSEs would be one of the cheerleaders for us if they take such a step. And out of a global treasury center, if they propose to raise, even a smaller, we don't have a cap on market capitalization. A smaller issuance also, if it is tried and tested end-to-end from GIFT, the complete confidence that the other participants, like the private issuers will get, will be immense. Other than that also, there are so many other products, such as, listing of CPCDs have been enabled now. Direct listing, I think all our previous speakers have spoken, so at the cost of repetition, I will not get into that. But the global, so-called global treasury centers can also explore so many secondary market options, secondary market trading opportunities at our exchange. So at NSE, we have proudly onboarded the SGX Nifty. In fact, SGX Nifty is now rechristened as GIFT Nifty. And we are happy to share that the trading numbers are so phenomenal that they are, the open interest which we see at NSE International Exchange is much more than the domestic NSE as on today. So, secondary market is also extremely vibrant. So the landscape has really evolved, and as we all say, this was just a trailer, picture abhi baki hai.
hello. Yeah. Is it audible now? Yeah, okay, great. So thanks, Eaton, for that insight in terms of the journey and exactly like I acknowledge that you started before IFSC, no problem, because that's the inception date. I cannot deny that. Anyways, so we've heard about products in terms of exchanges and the banks. I have three bankers on my panelist as my panelist, and I need to give justice to all. But before I move to other banker, I'd like to have a question to you, Parag. We've heard about products on banks and exchanges. Could you provide a perspective on the role of insurance in complementing the growth of financial services in IFSC? And what specific products would you like to bring emphasis to on this discussion?
Thank you, ma'am. Thanks for giving us this opportunity to showcase insurance specifically to such an audience. If you talk about insurance, insurance is making good of the financial losses. It's just that, nothing else. So we do risk analysis. According to risk, we charge a premium, and then when a situation occurs, we try to make good the financial loss to the extent which was previously planned when the premium was calculated. So when you say complementing the financial services, I'll say if insurance comes in the ecosystem, the financial services becomes easy. It's easy to lend, it's easy to recover, and it's easy to expand, because it's all protected. It's protected by an insurance cover. You see, India, in terms of insurance of financial services, I see we have a lot to go further, because international markets, there are a lot of financial products which got developed over time, which were restricted in India. Therefore, we see that once the IFSCA ecosystem started growing to that extent, that ecosystem will need to be supported by the insurance support also. And we, along with my other insurance partners, are working simultaneously on this to bring back the capabilities of, I'll say, specifically not just the Indian insurers, but the world reinsurer, who are doing this service to financial services across the world, be it Singapore, the IFSC, Dublin, or anywhere else. So we are trying to bring them over to us primarily to provide the same level of service in GIFT IFSC. If we talk about products, we have identified that first when we started our GIFT operations in 2021, the first product that we filed was a trade credit insurance, which is very different from the products that we do back home. It's definitely not a product which is available back home, only and only for GIFT City. So trade credit is, I believe it's already been discussed a lot. That's something which we have as an available product in the market. The second product that we are bringing in GIFT City, specific to the financial services, reps and warranties. This product covers merger and acquisition liabilities which may occur later. And we see that there are transactions happening in GIFT City. We have live transactions happening where I'll say merger and acquisitions have already started in GIFT City. We have started receiving policies for those covers. And another product on which we are very strongly working is the non-payment insurance. This product is strictly restricted in India, primarily to cover the lending that the banks are giving to the corporates. Once this product becomes available, this will be, we feel that this will become a game changer for bankers in GIFT City, because with the availability of this product, it will be possible for banks to lend to Indian corporates, I'll say, to a easier way, or I'll say to a great extent. That means beyond their credit rating, whatever the banks have done, if this is covered by insurance, they will be able to lend more. And that will become easy lending available for Indian corporates. Apart from these three things, which are specifically related to financial services, we see that captive insurance is quite meaningful for large corporates sitting over here, for large private corporates also. This is something which is still not available in India, in GIFT also. But we know a lot of private players who have started, Indian private players, who have started doing this activity from other markets. That means they have the captive insurance, or the captive company is created in US because the market allows it. I see this as a big opportunity for insurance once it comes over here.
Thanks Parag for that insight. In fact, from his delivery, I actually realized that it is not only about expansion of the financial products and services at the corporate level, what they can avail from the IFSC, but even as an entity, they have expanded the kind of products that they offer. So that's a new expansion dimension that I came to know. Thanks for that, Parag. We've heard about the products that are available in the IFSC. You've heard experiences also in the past from 3 entities who set up the Treasury Center. Let's hear the experience from a banker. So Vikasji, I'd like to put the question to you. If you could share your experience on the regulatory environment and some cases, use cases that you could specifically provide or like to share your.
Good afternoon, and thank you IFSC for organizing this event and giving us the opportunity. So, this was a dream of our respectable Prime Minister, Miss 2007. That's like India being a kind of a all the time capital needing kind of country. So we need to have an ecosystem, basically onshoring the offshore, and why other countries are benefited for getting flows to my country. So, but ultimately things started moving very fast after IFSC Act in 2020. And there we have got a regulator basically in place of 4 regulators. For banking, for capital market, for insurance, for pension, provident funds, pension funds. So the regulator actually, apart from regulations also light touch regulations, principle based regulations. They are given the task of kind of a development also. So more our engagement with the regulator more on kind of a development part. Most of the meetings they happen, then actually regulator, they want to check that, say, what is the timeline when we are going to start a particular activity. And then we have got a regulator, basically they are providing clearances on single window basis. And if we see like a kind of a, recently they have come up with a system where in case if you have got some confusion, you want to speak to regulator, in other geographies, we all have experienced that, say, engaging with regulator in itself, it's a challenge, and then generally the entities, they look forward towards consultants that say like they go and take time with the regulator and maybe put forth right set of questions, but here the regulator is so open that say you can go and you raise the query in your own words, and then they frame it and then they guide you that say how you can come up about it. So this has been quite beneficial for, at least for State Bank of India. I can say State Bank of India, we decided to set up, we were one of the first entrant to this ecosystem. 2016 we set up a shop, and gradually with the help of favorable regulations, enablers, regularly we are getting. So we are one of the biggest balance sheet. We already have listened in the morning that say the system has developed, banking system has developed to $80 billion. So we are one of the biggest player there. And by virtue of these things, actually we are able to do many activities here. And as has been this global treasury centers for corporates we are speaking, but State Bank of India, we decided to convert our treasury to central treasury. So apart from taking care of the requirement of a foreign branch, actually our treasury, they are taking care of other branches also from this ecosystem. So Riddhi, I'd say that because of this favorable environment only, we are growing, and our management, they are also keen to explore so many things in this system.
Thank you. That was quite inspiring for the others who actually intend to set a shop here in the IFSC. We've heard products like since morning, and even now the panel members have actually thrown some light on different categories of products available. So Manish, a tough question I'd like to ask you. In addition to the traditional lending and the trade products that we've been hearing about, and I'm sure there are some alternative sources of financing and innovative products that banks have to offer to the corporates here. So if you could throw some light on the innovative products and alternative sources of financing.
Thanks, Riddhi. You said it right. It's a very challenging question because at the end of a full day where the entire team has, Ashutosh talked about, Divesh Bhai talked about all the products, I'm expected to give some new set of products. It's a good challenge. That said, I'll answer this in 2 ways. There could be new products, but there could be also a new approach to business. So we as a bank, as ICICI Bank, we believe in 360 degrees banking. So when we approach a customer, we do not go with a product-specific approach. We first understand what is the need of a customer. So if you look at it, the entire spectrum as a philosophy, whatever we do from retail to high net worth to SMEs to MNCs, service companies, large companies, everything that we do in rupees, we can do in dollars over here. So that in a nutshell, the approach is what is different. When I talk to a customer, I go as a representative of the bank, not only GIFT City. Every time I meet a customer, we talk about 360-degree opportunity, starting with, their employee accounts, their flows, their collections, their billing, trade, lending, overseas, etc. So that's the first thing. Second, in terms of products, I think a lot of people have talked about, this session was preceded by a session on factoring, which is a very, very big focus area. There was Ashutosh ji talked about hedging and the fact that there is still a large part of the book that's unhedged. That is an important thing. I will talk about two things which have been less touched upon during the course of the day. One is, and it's a very important thing, it's often overlooked, liability accounts. Anyone who set up an overseas entity knows how tough it is to open a single account. It can take 3 to 6 months to open an account with the high street bank. And if you, God forbid, if you need more than one currency, you probably have to go to 3 or 4 different banks. The godsend over here for most Indian corporates is that we can open currencies up to 15 currencies. Most of us have, started off with 10 currencies as of now, under a single umbrella, single set of documents. These will be different accounts. It's not a multi-currency account, different accounts, but under the same set of, same custody, same KYC documents. I think that is a oft overlooked benefit of GIFT City. I mean, just imagine a company which has presence in 20 countries having to deal with 10 different banks. And second thing is, you're dealing with them in the same time zone as you. Most of the times, the decision makers are sitting here. So that's the second thing. Of course, you have access, just like ICICI, we are known for our technology, and therefore, that is something we brought here. With the ease of, on the internet banking, we can offer you very, very seamless access to your, currency accounts across the world. So that is one product. Second one, which is somewhat overlooked, is again non-fund-based, kind of products. There is a need increasingly for, with more and more Indian companies going overseas, getting into transactions, contracts, for offering, guarantees to overseas jurisdictions. So that is the second area. So, factoring, of course, is a big focus area. Hedging has been talked about, but these two areas I thought I'd just highlight in addition to our overall relationship approach to the client, to the business.
Great. Thanks for that, Manish. That's given new perspective to the old products that we've been hearing since the morning. So that's quite interesting. These were like, the first set of questions that I posed to the panel was more in terms of the general understanding of the products and services. Moving on specifically to the treasury services or the treasury center operations in the IFSC, I'd like to pose a similar question to both of you, Sachin and Parag, from insurance and banking perspective. How do you think that the growth of PSUs in IFSC can be viewed in terms of the cross-border financing and the treasury operations that they intend to set here?
So on the cross-border requirement, we've spoken extensively across various panels, be it working capital requirement, be it capex, be it hedging, or be it risk mitigation, right? So I will not sort of, go over it again. But I think the Treasury Center is a very big opportunity, right? And I meet variety of clients, right? I meet MNCs, corporates in India, overseas. One thing which is there is the GIFT City is a conversation which is had at every boardroom, right? Every single client, every single MNCs that I meet, the key focus item is in terms of what's happening in GIFT City, what are you guys doing, what are the opportunities, and how favorable is the overall regulatory environment. So I personally feel the Treasury Center is a very, very big opportunity. Once again, compliments to you for coming out with the overall Treasury Center draft framework. I think it is very, very competitive. We have sort of done an extensive mapping with other locations in Singapore, Hong Kong, London. And when we really look at in terms of the kind of products that can be dealt, kind of benefits which are available from GIFT City, it is right there. So all the people present in this room, all the CPSEs, I would definitely sort of encourage for you to really sort of look at setting up the treasury centers over here.
Thank you, ma'am. See, whenever we talk about cross-border, then for insurance, everything changes across the border because we have a different regulator over there and they control the business and they define the regulations applicable. But we have already mentioned the two things. First is the non-payment insurance, which will actually ease out the lendings that the corporate might get to work on with their overseas operations. That's one. Second is we are working on a specific product where we will be able to underwrite, or basically we say we'll be able to cover the overseas assets for the bank in case the bank is mortgaging that particular property of the PSU. So if I'll explain it a little more, if there's an overseas asset which gets mortgaged for a particular loan, that property can be insured with us irrespective of the local regulation, where the loss pay will be the bank branch in Gift City. But barring that, if we talk about specifically in terms of financial transactions, insurance will not be able to help much while being based at Gift City. Simultaneously, I'll say other lines of business. When a PSU is expanding, they will have people going around. There will be people posted at overseas location taking care of the global part. Now, from Gift City, we have developed products where we can cover all these employees, any citizenship, any country, any type of cover, 24/7, wherever they are. So that means if they are hiring global, that means they have people from other countries, experts from other locations, geographies. They can buy insurance for all of them from their Gift City operations only. We can cover them, we can service them. That capability we have already developed over there. Expansion in terms of expansion for more assets, ICICI Lombard, I need to come specific over here because we have partners in almost 40 countries who can provide a comprehensive compliant cover in the country of operation where the customer is. So if a large PSU is looking for a global coverage, then we can provide a global program. We don't have captive now, so the premiums won't come back, but we can provide a combined program where all the overseas assets gets insured with local compliant insurers based in the respective city at a common price. This is the general practice which is being done by almost all large MNCs across the world. But in normal scenario, all this premium comes back to the captive and ultimately to the customer. That benefit, whenever it is opened, I think that will be a big boost to all large PSUs, multinational PSUs.
Great. Thanks for that insight in terms of the other product offerings. Manish, when we speak about, we heard the case study presented by Indian Oil, wherein they mentioned that they have multiple lines of business and they are accessing financing very easily from the banks in the IFSC. There has been a question generally being posed to us that, whether we have sufficient banking understanding in terms of financing a treasury center, more so because treasury center does not have a balance sheet of its own. It's more of pulling in funds from other centers and trying to manage the cash assets that they have. So in terms of lending, when you look at a treasury center, what are the key challenges or perspectives that you look at?
So, Riddhi, just to take a step back, let's understand what the business model of the treasury center is. It's borrowing money, it's trying to kind of cash pool, it's investing, it's doing hedging across and providing a lot of those centralized treasury functions. So, broadly, it's a triangulation of three factors that we would look at when we assess the credit. So, obviously, we look at the parentage. First of all, what is the parentage, what is the balance sheet, what is the market capitalization, rating, financials, management, all of the normal things. And that is where, that's the relationship that we own in India. Typically, that is the relationship that we are most familiar with and intimate with. The second part of it is, what are the underlying transactions? What are the overseas assets? What are the cash flows? What is the profitability of those underlying assets, those underlying businesses? What is the feasibility? What are the kind of cash flows, mismatches, etc. So that's the second part, the underlying assets. The third is taking a very close look at the policies and the liquidity management of the GTC itself. What kind of bucketing is it following? What kind of excess or deficits do they have? What kind of undrawn limits do they have currently, which gives them a buffer? And very importantly, what is the use of technology? How robust are their systems? Because we know that if these things can go all right very quickly, depending on the markets, depending on the kind of instruments that they're holding. So what is the kind of buffers they have? What is the kind of real-time mark-to-market monitoring that they're doing, and the technology being used to monitor that? I think it's a triangulation of these three that we would, so the parent, the underlying businesses and overseas assets, and the overall cash flow management, cash liquidity, ALM situation, and how that is being monitored at the GTC itself.
Okay. I'm sure this reply would be very helpful for the entities who are actually looking forward for setting up treasury centers in the IFSC. The next question to you, Vikasji. Actually, there has been questions, GTC, as it was presented and so by some of the presenters, it's more of an in-house bank, looking at the requirements of financing needs of the group entities. But in the general parlance, it is, since we are moving out from the domestic regulation to the IFSC regulation, which is an independent, unified regulator in itself, still the mindset is there in terms of the treasury center to be akin to NBFCs and the regulations of RBI still applicable. As a matter of fact, we all know an entity which is set up in the IFSC is a person resident outside India, and all the regulations of RBI would not apply until unless you actually interact with a resident in India, wherein the FEMA would kick in. In terms of that, specifically from a public sector bank, what are the innovative products or new products that you would have at your end for catering to the treasury services being offered by treasury centers in the IFSC?
So right from the morning, actually, we are listening about Global Treasury Center and their functioning, and particularly, I'll draw your attention to presentation made by Standard Chartered Rajeshji. So, sitting behind, I was thinking that, say, like in case the things actually gets implemented in the way are being shown. So there will be kind of the spreads for banks will squeeze to any extent. Basically, as of now, you might be knowing that, say, like the bigger banks, even from India, they have got presence across the globe. So different subsidiaries of CPSE, they bank with different branches of the same banks of, and at times it so happens that, say, that like one of the subsidiaries, they are running long on funds, or whereas other subsidiary, they are actually borrowing. But this concept is all about actually pooling all these funds at one place. So now actually the spread what we were earning, that will certainly means we'll have to look for new ways. So there are a couple of new products or maybe different products where we can cater to them, to their global treasury centers from IFSC. First of all, Miss, like Manish has touched that liability, Miss banks, they will have to miss all the time. Actually, we, Miss banks are understood to all the time thinking about right side of the balance sheet, maybe looking for better assets. But to fund those assets, we need liabilities. So liabilities means where the treasury centers, maybe cash-rich companies, their treasury centers, when they are flush with funds or maybe long on funds, they can always go to banks, either in the term, in the form of kind of a fixed deposit or certificate of deposit program is also running from IFSC. And Miss of late, I am sure that all of us, we might have read their circular that say like, which says that even current accounts in foreign currencies, they can earn interest. So surplus funds will certainly earn interest. That's actually help me in liability, but help you in generating some returns. On the other side, asset side, means in case if you are running short on liquidity, certainly trade solutions are there with almost all the banks, 29 banks are present. So buyer's credit, supplier credit, even the trade portfolio in itself bought and sold, we all know. And third on currency side, basically currency side, we can provide you 2 or 3 kind of solutions from our treasuries. Basically 15 currencies, these are permitted in IFSC. So most of the banks and bigger banks, as Manish has said, that's like almost 10 currencies we have got active Nostro accounts. And the settlement, I'll not say that real time, but maybe a kind of a reasonable time we can settle your transactions in any currency. So conversions if you need, maybe the treasury center is picking up funds from one center and they intend to give it to some other center in the same day in a different currency. So I can facilitate that transaction. So these kind of currency conversion solution by Forex of my treasury we can provide. And the second important part, actually, Miss, I pick up that from IOCL case study. So derivatives also they need basically to hedge their interest rate and currency risk. Basically, they will be lending in different currencies, picking up funds in different currencies, so they need to hedge themselves. So there also, all the treasuries, Miss, we've got a robust infrastructure in IFSC itself, where we can be kind of a counterparty to your derivative requirements. So these are some of the solutions we provide, but as and when any other need arise, you certainly engage with the commercial banks in IFSC, and then we can come up with solution.
Thanks for that new perspective in terms of what PSB can also offer to the PSEs here who intend to set up. Hetal, I know that you intended to avoid the question on direct listing, but I cannot avoid asking you the question specifically because the disinvestment policy, DIPAM permits strategic disinvestment or minority stake sale as a medium of fundraising independently by the PSEs. In view of this provision, what are your views in terms of the subsidiaries of the PSEs which are being set up in the IFSC would look at listing in the IFSC, and other than tax advantage, what are the other advantages you see that they would have by such listing?
Sure. So my perspective on direct listing is that for any jurisdiction to grow, equity is a huge pillar. So it's very nascent. I mean, everybody asks us, must be asking y'all 3 times more than they ask us as to why after the regulations have been laid out, there has been no listing. But all these things don't happen overnight. It takes a long time. We've heard gentlemen from MCA, from other regulators share with us that it's been such a journey for everything since IFSCA has got established so many years back. We've had, from the IFSCA listing regulations first to the revision in 2024 to all these new regulations which have come out. I can say it's just been August that everything, the path has been laid out. Therefore, the most natural progression now is equity listing, and it will definitely happen. To answer specifically your question, it is very pertinent. The CPSEs here, if they are looking at the disinvestment, we've seen corporates setting up all sorts of structures in global jurisdictions. Even though it's a trial and error, they have set up all sorts of structures. They've successfully listed. They may have delisted later. They may have flipped later, but they have done all that. So the most natural progression is for, again, somebody to be the first case to take that step, take that leap, have the confidence in the flexible and light touch regulations that we have here and do an equity listing. Again, one thing which we strongly believe, firmly believe is while everybody uses the word light touch, it's often misunderstood as no governance, but it's very good governance. As the regulators have shared, it's the regulation with the best practices. Therefore, it is the most natural progression, and the advantages, as you just questioned me, I think a different diaspora of investors. That is something which nobody thinks of. So many different investors can, it opens floodgates. We don't, there are EFIs, etc. here in GIFT City, which are there nowhere in no other jurisdiction. So that could be one of the biggest advantages that they can look at, other than the easy regulations, different structures that can be set up, and of course the seamless listing that we can offer.
Okay, and that's interesting. I am sure there will be some questions in the audiences to ask to the esteemed panel members, but before I open to the audiences here, just a quick one sentence or one statement kind of an answer that I'll expect from all of the panelists is that we discussed a lot of product offerings in general and in relation to treasury, other services. But if you can give your quick thoughts in terms of the use cases that the corporates and the PSU in GIFT IFSC should look at on an immediate basis, even though if they do not want to set up shop here or otherwise.
So I think one area that I would probably say that could be the low, again, the committee's been established, but I think commodity trading is one particular area. Regulations permitting, again, as Parag had said, the captive insurer, these are 2 huge opportunities. I think these can be fairly game changing. The last one that I want to say, which I think can actually be strategic from the perspective of India as a nation, is actually InvITs and real estate REITs. Because that is the kind of real liquidity which is waiting, it's a gush which is waiting to come in. I think this is the jurisdiction that can really change things around. So I think, sorry.
Yeah, I go with what he said. So my, that would be my next best thing also. That InVITS is something which everybody asks us, everybody talks about it. And if there are any doubts, if there are any apprehensions, we are more than happy to discuss, IFSCA exchanges, everybody. But it's something that we should definitely consider. It could be a game changer.
Okay, thank you.
Maybe my ask to CPSEs here. Actually, I would love to see that day that say like CPSE board, they decide that say like the next kind of a fundraising activity, entirely it will be run through IFSC, and we 29 banks are looking for book as good assets like you to book in our, take you in our book. So maybe entirely rather than looking at kind of a thinking even about London, New York, Singapore, they probably might not participate. We only will participate and we will entirely book the asset, maybe in shorter span of time. Thank you.
I'll just add, RBI has just recently enabled bullion hedging. Just make sure that, and that is only permissible only in IFSCA. So if there are exposures around bullion hedging, really look at that. Second is, there is a significant amount of currency volatility. There is an ability of all the banks present in GIFT City to provide structured rate loans where you are not in a position to hedge yourself, or you don't want to take currency risk, you just want INR, there would be embedded swaps where you will be in a position to take those structured rate loans. And the last for the IFSCA, from the regional treasury centers, I think we should also, and I know there is already a committee working on this in terms of making sure treasury center as well as the commodities trading hub and the trading center, how do we make GIFT City as one of the global trading hub?
So if they are not setting up a shop in GIFT, there's nothing what an insurance can add. But without doing that, if there's one thing that without coming over to GIFT that can benefit you, is what I feel is, move your overseas banking to GIFT City. I think that will be helpful.
Okay, so there's a banking tip from the insurance guy. That's interesting. Thank you so much for the panel members here to give us insights about it. The forum is open for the audience in case if anyone is interested in asking any of the questions further.
First of all, thank you so much. It was really very insightful session, very well conducted by Riddhi ma'am and very well answered by all the participants. I have one issue because we were interacting with various banks. See, being a OMC, I'm from Indian Oil, so there's a lot of talk right now that you have to invest in green. Net zero targets have been set. Set aside what Trump has said, but definitely we have the targets in place. So companies have to do a lot. So is anything coming from the side of bankers, especially like in IFSC, because if you can recall in the last summit, when Honorable Finance Minister visited, she said that this is going to be the gateway for funding this net zero target of companies as well as the country also. So how the banking sector is basically going to support that in terms of green financing? Because recently when we went for a green framework and we asked for what can be the advantages, more or less it is at the same rate, whether you're funding for a green loan or for a normal loan. So how the banking sector is developing towards that?
So I'll take a stab at that. In fact, it's very interesting because on the sidelines of this conference, we just had a discussion with one of the PSEs. They are considering such a project. Quite honestly, at a time like this, we will have to co-create, right? We will have to work together, get use cases. We don't have 10 projects that we can line up and say, you've cut, this is what we need to do. We will work together. There are pools of liquidity. There are partners that we have that we can talk to. We will have to talk very nitty-gritty. Show us a project, give us the detailed report. We will evaluate. We have a huge team of people who are focused on this. We have a regulatory requirement that most of us are unable to meet because of various reasons. We are expected to do 5%. So we are very hungry for such things, such business. We will have to co-create. It is not going to be an easy thing. I don't know if any of my other panelists have a straight and easy answer. I don't. But I'm very today I'm committing to you that I'm willing to invest my personal time, our organization's time. We will put in all the experts. I'm very confident that we'll be able to structure a solution which can be a start. I don't know if it'll be brilliant or just perfect. It's a start. And by the fifth transaction, we'll probably be, have it down as a cookie cutter approach.
Thank you so much.
If I can just add, in terms of, yeah, I fully agree with Manish in terms of co-creating. There are global pools of capital, which we are very happy to connect you with, right? So that is one thing where how do we attract the global pools of capital to try and, sort of meet the needs of the country and all the CPSE. That is one. But let me also add that IFSC is the only regulator which has actually said that 5% of your book has to be towards sustainable finance. No other regulator has defined such direct target in terms of making sure that the book also has a composition of sustainable finance built into it.
And just to your comfort, Rajeshji, actually you have spoken about actually assets in green means to be financed from IFSC. We have given a proposal to IFSC that's like for funding those assets. Can we think of generating green deposits from this territory? So that proposal is also under examination. Say tomorrow if it goes through, so we'll have much ease to finance these kind of projects.
Thank you so much. I have one more question, if chair permits me. This is for Mr. Parag. See, you talked about regarding that insurance is very important as far as finance sector is concerned. In a broader perspective, we see with the capacity constraints that we have in India, including the Indian reinsurers, GIC Ray, and other insurance companies that we have, and you know that most of the big corporates, a major chunk of their premiums goes out of the country also to the reinsurance market. Do you feel that it is high time that we should have captives in India? Especially, why can't IFSCA, IFSC can basically be the initiator in that? Because see, the way they have allowed the treasury centers to fund their group entities, in the similar fashion, it is high time that they should allow big conglomerates to have captive insurance for their group entities.
So I 100% agree. And what you are saying is something what I was saying to the regulator a minute back. And yes, it is a requirement because it is a global trend. And we understand if we have to fight global, means, if we have to go out and fight with them, then our companies should also have the level playing field, which IFSC has always been advocating. And captive is a level playing field requirement. So until unless you get that, definitely I see that, you are still one level before a level playing field. So as soon as the government allows, we are there to propose a solution on that.
Thank you so much.
And I think it was more from the regulatory perspective. As you may be aware, it's an amendment that is required under the Insurance Act and which is already proposed in the bill which may be tabled. So we are waiting for the bill to be tabled and I'm sure everyone will get the opportunity to actually explore the captives. Yeah, thank you so much for this insightful discussion. I close the panel here.
Well, with this, we conclude this very interactive discussion panel. Also, I would like to request Ms. Riddhi ma'am to please kindly present the mementos to all the speakers. Well, thank you so much, everyone. A big thank you to our speakers and panelists for this insightful session. We now move on to our final session of the day, understanding. Yes, group photograph is still missing, so we are looking forward for this one. After that, we'll continue. Thank you to all the speakers and the moderator. We now move on to our final session of the day, understanding the legal and tax framework at GIFT IFSC. Understanding legal and tax framework. Tax framework and application process in GIFT IFSC. Taxation and regulatory frameworks are critical aspects of financial services. To give us an in-depth understanding, we have an industry expert with us. Please join me in welcoming Shri Jaiman Patel, partner EY, to share his insights. Can we also have huge round of applause for the gentleman, please?
Good afternoon, everyone. Thank you, IFSCA, for organizing this event and giving an opportunity to present on tax aspects. It's been an interesting day. We've covered different aspects, about IFSC. We've heard about practical experiences. We've heard about different structures at GIFT City, different kinds of treasury products, finance company, and all kinds of opportunities around GIFT City that we heard today. I guess the conversation is not complete, without understanding what are the tax nuances if you have to transact in IFSC or transact with a unit in IFSC. Second part is that, a question that comes in everyone's mind is that, how do I go and set up a unit in IFSC? So I think we touched upon some of these nuances in the previous sessions and in some of the panel discussions. What I'll try to do is that, try to cover things which have not been discussed in the prior sessions so that, we complete the entire loop. I think we heard a lot about the fact that, IFSC is a foreign territory, it's outside of India. But I think a point to note is that a unit in an IFSC is a non-resident from a FEMA perspective. At the same time, if you are a company in GIFT City, then income tax still treats you as a resident company. I think it's an important point to note because, all the provisions of the Income Tax Act which are applicable to a resident company will as such be applicable to a GIFT company as well. If I'm a branch of a foreign company, I am still a non-resident, but as such, by default, all Indian companies, LLPs who are set up in GIFT City are a resident company. And therefore, what you do is that, for your IFSC related income, under Chapter 6A, you claim a tax holiday for the same. And what the provisions of income tax provides is that, from a block of 15 years, you can claim a tax holiday for a period of 10 years. That's what you are eligible to claim. And after this block of 10 years is over, then from an income tax perspective, the regular income tax rates will apply. Minimum alternate tax, which is generally applicable at 18%. For GIFT City units, a concessional rate of 9% is applicable. But if you are opting for the concessional tax regime, which is there for companies in India, then even this MAT is not applicable to you. Then what remains is that, on your net profits, when you declare dividends, the withholding tax will apply. So if I am an Indian company who is receiving the dividend from a GIFT subsidiary, then at the same time, I am also eligible for a benefit under Section 80M, which basically says that, if a GIFT company declares dividend to an Indian company, and within a prescribed time, if the Indian company again declares back that dividend, then there is no double withholding tax which is applicable. Then the dividend is completely passed through as such. And for foreign shareholders, a concessional tax rate of 10% as such is applicable, which is at par with most tax treaties that India has signed for. Being an SEZ zone, all the other benefits, whether you talk about GST, customs, all of them are applicable even to all the units in GIFT City because GIFT is also an SEZ zone. Very quickly, this is similar to the treasury structures that we've discussed in the prior sessions. What is relevant to note, are some of the tax aspects to the various transaction limbs that I'll just touch upon very briefly. So in this structure, you have an Indian company who has set up a treasury center in GIFT, and you are dealing with, either banks in GIFT City or banks outside of GIFT City. And one of the questions which, someone asked me outside is that, if there are banks in GIFT City, then why should a PSU go and set up in GIFT City? Then I can very well borrow from those banks in GIFT City and there is no need for me to go to GIFT City. But I think a point to note is that, as of now, there are only 28 or 29 banks in GIFT City that have set up. If you are dealing with a bank which is not currently in GIFT City, for example, Wells Fargo or State Street or Bank of New York Mellon, who are not in GIFT City, and if you are dealing with them directly from India, then withholding tax will still apply when you make interest payments to those banks, right? Like we've covered in the previous sessions, banks in GIFT City are eligible for a tax holiday. And when you make interest payments to those banks in GIFT City, withholding tax does not get triggered. And it's an important element, because most financial institutions typically ask the borrower to do a gross up of this TDS. And therefore this TDS, which is typically, between 10 to 20%, is the cost of the borrower in India. And therefore, if you have any borrowings, from a bank which is still not in GIFT City, then you may think of, setting up your own captive treasury center in GIFT City, because, from GIFT City to those foreign banks, again, withholding tax does not apply. And it's a perpetual exemption. It's not linked to 10 years tax holiday, that is available throughout your presence in GIFT City, which is also an advantage because, while we talk about this 10-year tax holiday, there are a number of exemptions in the Income Tax Act, such kinds of, withholding tax payments or, tax exemptions for funds in GIFT City. These are perpetual in nature. Similar to, the FEMA provisions, how you are treated as a non-resident from FEMA is also a perpetual benefit which is there. Second point is, on income received by the GIFT City entity. There is a income tax circular which says that, when a GIFT City treasury unit earns any kind of interest income from an Indian company, then again, during the tax holiday period, there is no withholding tax. Again, it's an important point from a cash flow perspective, that there is no TDS from India to GIFT City. Outside the tax holiday, again, you have to maintain your regular net profits, your tax audit, and you are taxable in the regular manner. The fourth point in that bullet is, place of effective management. Again, very critical, for India headquartered companies. What happens is that, if you are an India headquartered company, and if you have global subsidiaries outside of India, whose status is of a non-resident, and if some of the key decisions pertaining to that foreign subsidiary are being taken from India, then there is a risk that, that foreign company or the foreign subsidiary effectively can be treated as having a place of effective management in India. And what this, results in a consequence is, tax liability for that foreign subsidiary and offer some of that income and, do tax filings in India. That's the consequence. And, being the headquartered in India, you may want to participate in some of those decision making, depute your people as, on the board of those companies, participate through video calls on those companies. I think these are guidelines which, the income tax department has prescribed, saying that, these can constitute, a place of effective management of such foreign company in India. Now, if you have a treasury center outside of India, then all these risks does exist for you. Having a treasury office in GIFT City means that, the GIFT City entity is also a resident company from an Indian Income Tax Act perspective. And therefore, between the headquarter in India, you don't run the risk of this place of effective management. Because from an Indian income tax perspective, both are resident companies. And this gives you a lot of operational flexibility to manage the affairs of the GIFT City company in a free manner. You can visit there, you can participate in board decisions, you can play a more active role vis-a-vis, a more passive role with respect to your foreign treasury centers. A fifth point is regarding deemed dividend. In this budget also there was a clarification in terms of, deemed dividend provisions will not apply. But before I get into, what the budget said, broadly, what deemed dividend means is that, if a company gives a loan or an advance to its shareholder or to a concern in which the shareholder holds minimum 10% interest, which is like your fellow subsidiary. So if you give a loan or advance to your shareholder or to your fellow subsidiaries, then this deemed dividend taxation does get triggered. Now what the budget says is that, this will not apply to IFSC treasury companies because, your business is borrowing and lending. But it comes with a caveat that, this exemption is applicable only to foreign groups who are listed as such. So, foreign groups anyways are now out of the deemed dividend provisions once the budget proposals are enacted. But a lot of people don't notice is that, there are carve-outs even for India headquartered companies. For India headquartered companies, there are two carve-outs from the deemed dividend provisions. First is that, if the GIFT City Treasury unit is lending money in the ordinary course of business, which it will do because, borrowing and lending is the regular business of a treasury unit, then the deemed dividend provisions don't get triggered in that situation. But this is applicable only on the lending part of GIFT City unit. On the borrowing part, again, there is a carve-out. The carve-out is that, if I'm part of a widely held group or a listed group or a public company group, then again deemed dividend provisions don't apply. So this takes away, a big number of Indian groups also from this provision, from this carve-out, on deemed dividend which is there. And the last point on the slide is on thin cap norms. Again, a very, very important provision, if you have huge borrowing, or if you are operating in India through a leverage structure, and especially if you've created SPVs in India, which a lot of power companies do, or a lot of infra companies do, or companies in real estate, you operate through an SPV model. And in that SPV, if you have substantial number of borrowings, and your interest expense exceeds, more than 30% of your profits defined in a particular manner, then, this thin cap norms does get triggered. And it gets triggered, if I'm borrowing from a related party who is outside of India. Now, again, this does not apply to GIFT City company. There is a specific carve-out which has been brought in section 94B, which says that, if I'm a GIFT City company making any kind of interest payments, then, these thin cap provisions don't apply to me. Also, it will not apply to the Indian company as well, because you are dealing with a resident company. So again, this concept of resident, comes to the benefit of units in IFSC in a number of ways. While you take the benefits of FEMA being a non-resident, being a resident, you can claim benefits of ATM or thin cap provisions or withholding tax provisions. All of these are applicable by being a resident company in GIFT City. So I think these are very interesting provisions that have come. While this budget, we've seen, few provisions that have come. But if you connect the dots with the previous 4 budgets that have come, I think it completes a number of loops around treasury centers, around finance company centers who are set up in GIFT. First you had the tax holiday, then you had interest exemption, then you had, thin cap that was taken out, and now, deemed dividend is also out. I think this clears the way, for foreign headquartered treasury companies as well as India headquartered treasury companies to come and set up. Like in the previous session, someone mentioned that, it's an evolution. Similarly, even for treasury centers, it's an evolution. Like a lot of people ask us questions that, why are there only 3 treasury centers in GIFT City? Why are there not more treasury centers? If the regulations are so good, if the tax framework is so good, then why are there only 3 companies, right? I think the simple answer is that, it's an evolution. The regulatory framework is evolving. We had the earlier guidelines. We have the new draft that has come, which is more updated, more clearer, with more examples. And these tax framework also have evolved in terms of exemption. I think this last leg of deemed dividend that was pending, I think now most foreign companies or Indian companies who are looking at inbound investments or outbound investments, or who are looking at, cash pooling structures in a more free manner, will look at this very, very closely. And ArcelorMittal, is a very classic large example of what they plan to do. We've covered this structure in the past in terms of, PSUs also can set up a captive finance company, treasury company. You can borrow from GIFT City banks, no withholding tax applies. I'll skip some of these slides. Listing, again, we've discussed in detail, 9% withholding tax, far better than, most tax treaties that India has. Leasing, again, if you're operating ships or aircrafts, again, it's an interesting window. We've also made a representation to IFSCA to enable leasing in broader range of products. Again, once that is enabled, then it will also open doors for a good number of PSUs who are in oil and gas sector especially, because that is also something which IFSCA is considering. I think bookkeeping is one area, we touched upon very briefly in one of the sessions, but if you're a PSU with, large number of foreign subsidiaries, then you can manage their accounting, taxation, all the back office related functions, from GIFT City. Again, GIFT City provides a tax exemption when you operate from there, as well as, there are state incentives as well, which are employment linked. So if you are looking at setting up a captive center to manage your global finance and accounts operations, then GIFT also provides, a cost efficient zone for you to operate. I think that largely covers the tax part, and Kavishji mentioned about BEPS Pillar 2 as well very briefly. Again, it's a very important area, that while you are exempt in GIFT City for a period of 10 years, globally and OECD look at you from a overall country blending perspective, that what's your effective tax rate. And if you look at the overall blending benefit, you will still pay more than 15% tax rate for a long time. So I think GIFT, that way, the tax holiday is also protected from a global pillar 2 vis-a-vis other centers who may suffer, 15% minimum tax rate. I think again, the setup process also we've discussed in some of the sessions. But very briefly, you need to look at the minimum capital norms which IFSCA has prescribed, the minimum manpower and governance norms. For a treasury, it's 0.2 million USD. For a finance company, it's 3 million USD. You need minimum 2 employees to operate from there. You need an office in GIFT City, physical office, which many people are not aware. You can't remotely have a paper office in GIFT City. You need a physical office, which is manpowered by minimum 2 dedicated employees. You can have more people as well. And there is an application process which IFSCA has prescribed. Now, like we discussed in the previous slides, IFSCA has come up with a single window IT portal. It's a good portal, where you apply for your SEZ license and IFSC license simultaneously. And once you get the license, then, and also, you need to do with the MCA compliances of setup of the company as well. These are the key setup procedures, but otherwise, all other provisions which are applicable to an Indian company will apply to you, like obtaining a permanent account number or a GST number or a bank account. All of those things I think are done in a routine manner, but very easy to set up. It typically takes like, I would say 2 to 3 months, including all these steps and procedures for you to come and ready to do the business. I think up to that level, you can be ready in 2 to 3 months time. I think that this broadly covers, setup and tax nuances. If there are any more questions, then I'm around, or you can email me or IFSCA, and happy to answer any questions. Thank you so much, everyone. Are we done?
I wanted to stay, wish to present your momentum. Okay. Thank you so much, sir, for sharing your valuable words. Well, I would like to request Ms. Riddhi Bhandari to please kindly present a memento. Also, I would like to request from all the present people to give them a huge round of applause, please. Thank you so much, everyone. Thank you so much. As we conclude today enlightening discussions, we invite Shri Anamik Badshah from IFSCA to deliver the vote of thanks. Please join me in welcoming our respected speaker.
Thank you. Honorable dignitaries, esteemed guests, and distinguished speakers, as we conclude this insightful summit on business opportunities for public sector enterprises in GIFT City, it is my pleasure and my honor to extend a heartfelt vote of thanks on behalf of IFSCA. Firstly, we are immensely thankful to Shri Pankaj Jain ji, Secretary, Ministry of Petroleum and Natural Gas, for his thoughtful perspectives and guidance. Our sincere appreciation also goes to Shri K. Rajaraman, Chairperson IFSCA, for his keynote address and strategic overview into evolving financial landscape in GIFT IFSC. A special thanks to Shri Rajeshri Gupta, MD and CEO OVL, for his opening remark. We also extend our gratitude to Srimati Sorbhi Jain, Joint Secretary DEA, and Shri Bala Muruganji, Joint Secretary MCA, for their contribution to the discussion on financial and regulatory opportunities for PSEs. Our appreciation also goes to all esteemed speakers, panelists, and industry experts who shared their expertise and enriched today's deliberation. We are particularly thankful to the key stakeholders and business leaders for sharing their experience and pioneering projects to GIFT IFSC. A heartfelt thank to organizing team from IFSCA and ONGC, and finally to all delegates. Your presence, your patience, your engagement have made this summit truly impactful. So let us carry forward this insight, the knowledge that we gained today to foster growth and innovation in GIFT IFSC. With this, I wish you all a wonderful evening. Thank you.
Thank you so much, sir, for the closing remark. Ladies and gentlemen, that brings us to the end of the IFSCA CPSE Summit 2.0. We thank each one of you for your participation and valuable contributions. We now invite you to join us for high tea and networking. Have a great evening ahead. Thank you so much, everyone.